Good morning, everybody, and happy Capital Preservation Friday. My name is Jim Cagnina, Senior Market Strategist, and I am joined by Tracy Schuchart, aka Shy Girl, our Senior Economist. Tracy, how are you?
Oh, I'm doing good, Jim. Good morning, all.
Super pumped up. We got some stuff in store for you today. We've got PAX here. We've got Blake Morrow coming up in a couple of minutes. We got some awesome superstars trading the Open today as well. So great show. Thank you everybody for being here. Shy, what's going on overnight?
Just really quickly, we have senators that seek to block NVIDIA from selling top AI chips to China. There is a new act now. The GAIN Act was shut down. There's a new act called the SAFE Act, and that would order the Commerce Department to halt export licenses for sales of chips to adversaries, including China and Russia, for at least 30 months. This also would affect AMD and Alphabet's Google. We have BlackRock. Bitcoin ETF sheds 2.7 billion in record outflows. We talked about how we haven't really seen institutional investors back in on this latest kind of rally from the bottom in Bitcoin. So we have investors yanked more than 2.7 billion from exchange traded fund. The BlackRock ETF over the 5 weeks of to November 28th, with an additional 113 million of redemptions just yesterday. So the ETF is now on pace for the sixth straight week of net outflows. And moving on to cryptocurrencies beyond Bitcoin have been hit the hardest in this downturn. A market vector index tracking 50 mid and microcap tokens has fallen nearly 70% this year. Altcoins have now shed 200 billion on paper since the market peaked. One of the reasons for this is the competition for retail dollars has become more crowded. We've got zero-day options, speculative tech stocks, leveraged ETFs, and prediction markets that can offer faster upside and quote-unquote better thrills. Then we have also copper extends its record-breaking rally as Citibank joins the bullish chorus. The copper market is set to enter a structural deficit next year, with a shortfall widening over the next decade on robust demand and constrained supply. And then one final thing, one last note. We do have PCE this morning at 10 and core PCE, which is the Fed's preferred metric. But I want to note that this is very stale data. This is September's data. So I don't expect it to be hugely market moving, in the sense that I doubt it will change anything as far as Fed rate cut expectations are concerned, because it is so stale.
So Shy, refresh my memory. Will we also get that October core PCE or no?
Not until we will not get October's. We will get November's, but that won't be till after the Fed meeting.
Okay, so there's going to be this data gap everyone's going to freak out about because they can't run their regression lines.
Right. Yes. Essentially, that is the case. But so I know that it's, big data. We also have at 10, we have University of Michigan sentiment and Michigan 1 year and 5 year inflation expectations, as well as consumer credit. So there is a deluge of data at 10, but again, the major data, that core PCE is stale data from September.
Wow, terrific. All right. Well, it'll catch up eventually, I guess. But, Shy, I was surprised this morning, woke up and there was like no volume again in a lot of these markets. It's like everyone's going early to Christmas.
It's Christmas. Everybody's got Christmas parties going on. I think there's also, I think a lot of people, are not piling back into riskier assets like Bitcoin we just talked about. And so I think we probably will see, lower volumes for the rest of the month.
Yeah, no, for sure. I mean, the whole crypto space, I mean, Ether's down a little bit today, 68.68%, Sol 2.88%, Ripple 1.84%. These are all negative numbers, people. And the Bitcoin, which we'll talk about some more in a little bit, down 1.52%. So that asset class across the board is getting whacked.
Yeah, absolutely.
So in any event, the good news though is on Fridays, and right now in a couple seconds, actually right now, we have Blake
Right.
Morrow, the pip czar, with us. Let's get him in here. Blake, how are you?
I'm doing great. Good morning, TGIF, everyone.
And you look fantastic. You look bright-eyed and bushy-tailed. You're on the West Coast. I mean, I don't know how you do it, man. You look great.
It's just the haircut. I got a fresh haircut. A fresh haircut takes 10 years off, and it makes me look, all happy and smiley. So,
Oh my God. I got a fresh haircut yesterday too. It makes me look older. I don't know. I'm doing it backward. Anyway, thanks for being here with us. We appreciate it as usual. Let's get right into it. I mean, let's tell what's going on with the US dollar. Let's just start with that as a general broad category.
well, the dollar's actually been sold pretty aggressively this week. We've seen the euro break out of a triangle pattern. We've got the Aussie dollar has reversed course. The Kiwi, we were just literally at the bottom end of our ranges in some of those commodity currencies, and they have just ripped higher. We're on the heels of a Canadian jobs report, which actually is, since they didn't have a government shutdown, they actually have current data coming out. That's going to be out in a few minutes. And you've seen the Canadian dollar strengthen. There's just been a lot more optimism in the, as far as with risk appetite. I mean, we've got S&Ps that are, at the 88% Fibonacci retracement from their all-time highs, so just really near highs. And so the dollar's just been kind of sold as a result of that. I think there's a lot of dollar weakness as everybody's anticipating Kevin Hassett to get the nod, as Donald Trump accidentally, quote unquote, accidentally slipped his name, in a press conference. I know there's been a lot of pushback from, people on Wall Street. There's been a lot of notes written about pushback, but he may not be the, visually and maybe most powerful person that you would you expect from a Fed chair, but he is intelligent. He was on McCain's economic you know economic person, and a couple other really high ranking GOP individuals over the course of the last couple of decades. He's an incredibly smart person, but the market believes that he's going to come in and he's going to be Trump's yes man. And then as a result of that, people are kind of selling dollars. They're unsure of what's going to happen with the Supreme Court decision, which could come at any moment. And so the dollar's been under pressure as a result of that, pretty much across the board, despite yields rallying. And we've seen the 10-year, with the 10-year yields moving higher. We have the 10-year notes at I think pretty important support today. And despite the rally in yields, the dollar has not been able to reciprocate.
Yeah, you just weaved in a whole bunch of stuff there.
Yeah, sorry. There's been a lot happening since the last week since I talked to you guys.
No, for sure, for sure. So, Shai, your opinion on this whole U.S. dollar, the anticipation of new FOMC team.
Well, I mean, I think, we have seen on a technical basis, every time this gets over 100, it gets slammed right back down right at that 200-day. So technically speaking, this chart really hasn't changed a whole lot. We know the administration would like a lower dollar. And so I think we'll still see continued weakness in the dollar because that seems to be what everybody wants in the administration. But I was curious I wanted to talk to Blake a little bit let's talk about the yen a little bit, because it looks like BOJ is actually going to raise rates on the 19th. I think they're factoring in 80% chance. So what does that mean for the yen? We did see the yen rally, a bit this week on that. Have we found a bottom or a top, I guess, in Forex?
Yeah, when you're talking to Tracy regarding the yen's been an interesting animal, and I think every other time I've been on this show with you guys, I've told you that the yen's just it's a bit confusing to me, and I think it's being pulled in different directions. The JGB yields are just flying right now, and it's kind of like their version of the bond vigilantes are out in force, selling, uh, you know, 10-year JGBs, and you're seeing yields rip, and the dollar, or excuse me, the yen, it just hasn't really responded. You every day I wake up, and really it's been every day this week. I wake up and I think, oh man, this has got to be the morning I wake up and I look at the yen and its strength and just rallied out of its shoes, and it really hasn't. And which is surprising, especially with the dollar weakness that we've seen. You would think that the dollar yen would be a lot lower, which begs me to question, even though the market knows that the BOJ is more than likely going to raise rates, how aggressive will they be? They tend to be more conservative central bank. They've always been. And so people, I think, are just like, yeah, they might raise rates, but how aggressive are they going to be? As they should be more aggressive in raising rates. But when you have a country that was beaten into submission with deflation for 22 decades plus, you have a very hesitant BOJ that's reluctant to just start raising rates as they would be fearful of putting the Japanese economy back into that state. So I don't know. The yen has been a very interesting animal to me, and that's why I haven't really traded it a whole lot.
I threw a chart up, you guys, and we have a double top, right? We could call it a double top. I'm going to call it I'm sorry, double bottom. I'm going to call it a double bottom, not double top, from the calendar year. And like you can see this, what Blake's talking about, this kind of like it's kind of a slow, maybe disappointing rally back up. We're miles away from the November highs, and we're even further away from the October highs. And one of the things that I'm wondering about is this carry trade idea, right? I've been hearing about this carry trade for my whole entire adult life, pretty much, more or less. And right now you got U.S. yields at 4.1, and JBGs are what, less than 2, 1.95, give or take. That seems to be still a pretty big spread of something you might not want to unwind. Any thoughts on that?
I first of all, I don't know if that's where the carry trade really is. I mean, yeah, and I'm with you, Jim. I remember I'm old enough to remember and been trading the early 2000s when the yen carry trade was the trade and the only trade on the block. But we've seen, some of these yen pairs, they've moved up. Whether you're talking about the Aussie yen that's trading at levels that we haven't seen since June or July of 2024, but really, I think a lot of the carry is not necessarily in the yen. Of course, there's still some in there, but it's really going to be in the emerging market currencies, like whether you're talking about Mexico or South Africa or some other emerging market country. Is there going to be a yen carry unwind? Maybe, but I think it'd be more relative to if we saw an equity market sell-off. I think it would be more of a it would move concurrently with the markets, but I don't think it's something that's going to cause. I think everybody's worried that the yen's going to unwind and we're going to see this massive rally and then stocks are going to implode. That was the playbook from 2 decades ago. That's not the playbook from today. Yeah, I think the unwind is you watch emerging market currencies like the Mexican peso, which, by the way, the Mexican peso is threatening to hit its highs of the year today, like right now. And so that is really oppositely suggesting that markets really want to take on some risk going into year end. That is the inverse, and what most people are looking the wrong direction in FX. They should be looking at emerging market currencies right now.
I think I could even pull that up. Go ahead, Shai. Well, I'm going to pull up.
Because like you talk about this a lot when you talk about the S&P 500 and the peso. So kind of explain that correlation there.
Yeah, well, imagine a central bank that has rates so much higher than where the Fed's at. If you want to sell dollars and buy Mexican pesos and park it there and then carry that interest and be able to reap the benefits of just parking some money in pesos. That's where, the FX market, just remember, it is the biggest market in the world. And when you have asset managers globally that are just trying to move around lots of money, for them, if they can get a couple percentage points on a carry trade, that's when they say, well, I'm going to just buy Mexican pesos and I'm going to sell dollars. Plus, on top of that, you got Scheinbaum. I want to say, I almost said prime minister, but it's actually president. President Scheinbaum, she's meeting with Trump today too, which is probably, another thing. I know they're talking about World Cup games at the White House, but they're also going to, obviously, Trump's going to be talking about trade with Carney and with Scheinbaum. But anyway, regardless, traders tend to hold Mexican pesos as long as risk appetite remains strong. If you start to see the dollar Mexican peso go the other direction, which would mean that the Mexican peso starts to drop, if that happens, that, in my view, that's when I start looking at the S&P saying, I need to start cutting some things here. I need to maybe get short some Netflix or whatever. I might become more bearish, quote unquote, risk if I see the Mexican peso going the other direction, which it's just not right now.
Yeah, I mean, I'm looking at this is another currency pair, another CME group currency pair, everybody. We don't routinely cover this, but I'm looking at it right now. We'll add some technical analysis later on in the day, but thank you for that, Blake,
Yeah,
for sure.
my pleasure.
I'm going to pivot over, if I can, to the Euro FX. Let's take a peek at the Euro FX on the chart right now.
Sounds good. Yeah, the euro's been really strong, and this is one of those charts, Jim, that you've got here that if you can zoom out and actually just show us the entire year worth of moves, just remember that the euro rallied from a very low level at the beginning of this year, and because of there's a lot of reasons. You can look at the administration as being whether they're just maybe a little erratic and people don't want to park their money in dollars anymore. They know that the Trump administration is vying for a weaker dollar, or however you want to spin this story. The fact of the matter is the euro rallied quite substantially in the first half of the year, and we've been sideways since June. Now, when I see a chart that looks like this, that means that there's not much of a pullback. That means the market is still very hungry to sell dollars or buy euros. I mean, if you think about the Eurozone, people aren't buying the euro because the Eurozone is such a great place that it's a beacon of growth and hope, and no, but what it is, it's stability. And they know that they can bypass maybe some of the erratic behavior from the Trump administration, whether you're talking about tariffs, trade wars, dropping bombs on different countries, whatever your argument is. Risk managers, money managers, institutions are looking at the euro as more of a safe haven right now, or an alternative to the dollar. And that's where, when you look at the FX, you're like, okay, well, if we've been in a range literally for the last 6 months, and we're in the middle of that range, there's a good chance, especially if stocks continue to move higher into year end and we get some sort of Santa Claus rally, there's a good chance that the dollar could weaken, especially if the Fed comes out next week and says, well, you know what, we're gonna cut rates, we're gonna leave the door open because there's so much data coming in after our meeting, that we need to leave the door open for potential rate cuts going into the beginning of 2026. The market's really looking for a hawkish cut. And that would be more of a neutral to slightly dovish cut. So if we get something like that, you see that little range that you got there in the last couple months in the euro, that's right at the right hand side of your chart. That double bottom, that's going to yield us a move to 118, 119. So if it takes off, Jim.
I got it. And Shai, walk us through the idea of a hawkish cut.
So, well, a hawkish cut would be how we are going to cut rates right now, but we are going to hold next year, essentially, until obviously Powell is out of there. That would be a rather hawkish cut, saying, we're on pause. We'll do this once because the market's is at 80% or 90%, whatever it is. So we'll do this once,
Yeah.
but we're not sure moving on. And then also you would want to look at the dot plot because I think this time you're going to have a lot more dissent than we are used to. We did have one dissent the last meeting, but generally Powell doesn't have, hasn't been known to have a lot of dissent at any of these meetings. And so if we see those dot plots kind of shift and we have more dissent going on, that would also signify kind of a hawkish cut because you don't have everybody kind of on board with let's just keep cutting. But since we are on that topic, I wanted to look at the 30-year also because we had B of A came out this morning and they said the only thing that could stop the Santa Claus rally is a dovish Fed cut causing the long end to sell off. And to me, technically speaking, even though I hate this pattern, it does look like a head and shoulders, and it does look like we're starting to fall below that neckline, which is a little concerning. So Blake, what are your thoughts on kind of the long end?
Well, first of all, I want to agree with you. The worst technical pattern. I remember the first book that I got in trading was Market Wizards back in 1997, and then also what's sitting on my desk over there is the technical analysis of stock trends. I think I've got the eighth edition, from again decades ago, and I'll tell you. The worst chart pattern in the world, in my opinion, is the head and shoulder pattern. It's the least
reliable.
Reliable. Yes, that's the word I'm looking for. But at the same time, I'm also looking at a long-term trend line going all the way back from May of 2025, so May of this year, all the way across the lows that come in right where we're at as well. So, when you see a confluence of that, meaning that if we do break that neckline, that means we're also breaking a trend line that's been in existence, for the last 7 or 8 months. That would kind of add the fuel to the fire of lower, higher long end rates, but lower bond futures. So I think we're walking a really tight. We're walking a really tight line here. Not only with the notes or the bonds, but also the notes as well.
Yeah, this is a surprisingly ugly chart. In addition to the head and shoulders, and this is going to be a natural formation of the head and shoulders, is that double bottom, right? We have this double bottom now pretty close to that 115, 24, 30 seconds. And, it's looking like we're going to break down below. And as Deli was suggesting yesterday, could be bombs away here for the 30-year from a price point of view.
Sure, and what's perversely, Jim, just you pointing that out, it is an ugly chart, and the dollar looks ugly too. And one would think that okay, if the bond market sells off, notes, whether it's the long end or even maybe some of the shorter term, fixed income products start to sell off. You would think with the rise in yields, you would see a rise in the dollar. But what we are seeing is we're seeing a rise in yields globally. I mean, I don't know if you guys have taken a look at what's happening and not only the JGBs, because we were talking about those a bit ago, but also what's happening in what's happening with boons so you're seeing yields just kind of rally across the board, which is scary. If you think about it, because I haven't seen the stock market really respond to higher yields globally yet, but maybe we might get some sort of reaction. Maybe this is what allows the stock market to go, hey, wait a second, yields are rallying not only here in the U.S. but across the globe, and maybe that becomes more of a concern for equities as we go into year end. I'm not sure.
Yeah, and it looks like the whole yield curve is shifting up. That's not good for borrowers, right?
No, it's not. It's not. It's not. So I think we're at a really, really big inflection point for a lot of assets. And whether you're talking about the equity markets that are just close to all-time highs, or fixed income, or you're even looking at the dollar that looks on the cusp of breaking down. And then we haven't even talked about precious metals that are just relentlessly bid too. I mean, This could set us up for a really explosive Santa Claus rally or a big reversal, and I think it's all very pivotal. I think everything we're sitting on probably hinges on next Wednesday, believe it or not.
Yeah, I would definitely have to agree with that. I think it's gonna be the messaging because we already know they're gonna cut, so it's 100% gonna be the messaging, and it's going to be that dot plot. I think that are going to be most important. Of course, Powell Presser and how he comes off, whether dovish or hawkish.
So here's the thing. I'll pass it back to you, Tracy. My team and we've discussed the FOMC, to high heavens, because obviously as a currency centric trader, we as currency traders, which is probably 90% of 80% of my trading. I really have to focus on what central banks are doing, divergence, convergence between what's happening in European yields and US yields and blah, 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 blah. So what the FOMC does and says does matter to me. And it should matter to everybody, actually, in my opinion. But regardless, when you talk about the Fed and their messaging, we're going to have a Fed I guess the question is, how could they not leave the door open, especially when you look at like the BLS revised, data sets that we're getting, whether it's CPI or jobs data after, the Fed meeting. They're getting all of this really critical data after the fact. They have to leave the door open because they're going to look like a bunch of morons if they don't, and the data just comes in well below expectations. They will really lose a lot of credibility. So that's why I'm like, how can they deliver a hawkish cut at this stage? I understand why they would from a Powell personnel perspective, but from a data perspective, I have a hard time getting my head around how they're going to be super hawkish as they're cutting rates with the data coming out after the fact and before the end of the year. So I guess that's why I wanted to throw it back at you. What are your thoughts there?
Well, I think that they'll get the data after the fact, but that said, and there is a lot of alternative data that the Fed does get. They have thousands of PhDs there. There is alternative data. The state data was still out. There is, other employment data and things of that nature. So they do have, I think, in my opinion, they do have an idea of where inflation is sitting and where this job market is sitting, even if they don't have the critical data from the BLS. So I do think that they do have some sort of idea what these numbers are. And that would be the only reason that I could see a hawkish, like a very hawkish cut. Because, if we see inflation higher and stickier, that is a problem. We've heard a plethora of central bankers say that was their number one worry. It wasn't until Williams came out and said, I think we should cut, that the market sighed a relief, and we went from a 30% chance of a cut to 90% chance of a cut.
I want to ask you this, kind of, I guess, funny question. When's the last time Fed Chair Powell when's the last time he did not deliver us a good Santa Claus rally? I don't know.
So also.
Well, I mean, we got a little bit over a minute left. I just wanted, on this very note here, I know we don't have to worry about this till May, but there's going to be a shift in policymakers at the FOMC. Is there going to be more conflict and more stress now and less consensus, you think, going forward here after we make that transition? Start with you, Blake.
100%. Okay, I'm done. No, jokes aside, absolutely. I think if it is Kevin Hassett, he is going to be very contentious in the Fed. That's why I also believe if the Wall Street's in Trump's ear right now, saying, "Hey, he's not a good pick," Trump's gonna ride it out because he hasn't said he's gonna select somebody until after the beginning of the year. So he's gonna ride out the Kevin Hassett put for the next couple of weeks and let us go out on a high note. And if he's gonna throw in like Warsh or Waller, he'll just do it at the beginning of the year. So, but yes, going into 2026, very, very contentious if it's going to be Hassett.
Yeah, Shy, real quick. On that note, so I just got thrown off. Follow up on that
I know.
idea.
I just heard that too. Yeah. Well, I think if it is Hassett, I think that sets us up for more dissent within the Fed because people will try to counterbalance his super dovishness and his kind of, they consider him more of a Washington guy, not a central banker, more of tied to the administration, whereas somebody like Waller would is in the central bank, more one of their peers, not coming straight from the administration. So I think if you do have Hassett, you could really see a lot of dissent within the Fed.
Well, but the other factor here that I'm a little bit anxious about is that, we're going into midterms, right? And midterms have always not been kind to the incumbents. And so there's going to be some political sensitivity there. And that's why I'm kind of surprised with where we're going with this pick right now.
As
Any
far as
thoughts?
Hassett is concerned?
Well, no, Hess is, well, I don't know. You tell me.
I don't know where you're going with that one.
Well, so what I'm saying is, we have this midterm coming up, and it's kind of important, right? Things could change. We could have different parties in different places after the midterms. I know it's not, we have all year to think about it, but a lot of this policy is going to be driven with that top of mind by the administration. And having said that, the idea of consensus, forget about it. I mean, why are we not only going to have one rate cut and then wait forever?
Can I jump in there?
But
Yeah.
yeah, go.
Okay, well, the Fed's not known to start, stop, start, stop. So that's the other thing is if the Fed's gonna signal that they are gonna pause, I think most market participants say, okay, if they're gonna pause and they really just shut the door on another rate cut, that means they're probably gonna pause all the way through, until Powell's replaced. And so that's, I think, the real kicker. And so you got to look at the dot plots, and if the dot plots suggest, man, hey, we could really theoretically get another rate cut in the next meeting, then that means that the rate cut campaign continues, and so does the Circus Act with the stock market. Did I say Circus Act? I did.
You did.
Sorry, I didn't mean that. Just kind of slipped out. Sometimes
I
it
like
just slips
it.
out.
It's true.
Oh man, I just kind of go back to what Deli was saying the other day about we never up until recently just nonstop talked about the Fed, what the Fed's going to do, what the Fed's going to do, and now it just seems like it's every single day, every single minute. That's all we care about. We didn't used to do this. I agree with them, and so now it's
Well,
front and center.
they are like the Wizard of Oz, and they've got the levers, and they're the ones pulling the levers. Speaking of which, just in case you guys, some FX people might be listening in, Canadian jobs report came in, much stronger than expected, and that the dollar Canadian actually reversed, and it's interesting. We joke about it and been joking about it for years. I always believe that Canadian data is leaked, and yeah, you can see the Canadian dollar right there. Canadian data is leaked, and traders get ahead of it, like literally an hour beforehand, almost religiously. It's like we joke about it, but you don't want to trade it, but you see it happening, and you're like, man, somebody somewhere got that data way before anybody else. But yeah, the Canadian currency is on fire right now. So.
Yeah, I mean, this is kind of a nice, yesterday's candle, just to kind of, I don't want to get too much into the weeds here, but it's a total doji, right? It was very anticipatory for going into this morning. We opened exactly where we closed, and then boom, we have a pretty big, significant breakout to the upside here because there was like, I don't know, a lot of resistance up here toward, 71, 75-ish on the futures, and now we're moving up. Let's take a look at the intraday chart.
Yeah.
Wow.
Yeah.
There you go.
Canada's putting on the jobs. I think that's their motto. Hey, we're going to war with the U.S. So let's employ as many people as possible. You know. So when I say war, I'm talking economic war, guys, not any other kind of war.
Not actual
But
war. We're
not
not
actual
going
war.
to actually
No.
invade. We're not actually going to invade Canada, even though Trump
No,
has
we're not
joked
taking out the
about it.
Smokies. No, nothing like that.
Well, anyway, well, great currency appears by the CME Group. Awesome. Every Friday, Shai, Blake is going to be with us every Friday,
I
which I'm so
know.
pumped up about, man. Thanks for doing this.
I'm really excited to be here with you guys and the team. Like I have the utmost respect for everybody here. I love PAX who's coming up, and I love everybody they have here. So I'm just glad to be part of it.
Yeah, no, for sure. We're so happy you're here as well on Friday. We're finishing strong here on Ninja Trader Live. Blake, you have a great weekend. Great seeing you. Tracy, great talking to you as usual. I will talk to you later on today, and we are gonna move on to Capital Preservation Friday. Thank you, guys.
They
All right, it's that time. We have the man, the myth, the legend, my good friend, Pax. Good morning, buddy. How are you?
Good morning, Jimmy. How you doing?
Pretty good. Pretty good. It's Friday, as we know. Low volume day today. Second day in a row, we've had this really low volume. We've got some warning signs in the bond market and all of that stuff. But really, I'm looking forward to the weekend, to be honest with you.
Yeah, me too. I got I weekend's not here yet. Not until after the open when I decide that there's nothing to do here either, and then I walk away from it. I haven't done anything all week long. There's nothing to do, and if I don't, I mean, I was going back and forth with some traders on Twitter yesterday. A lot of younger traders love these sort of short-term entries,
Yeah.
and they give you these nice kind of clear little 15-point breakouts or 10-point breakouts and things. At this point in my career, I'm not looking to trade that back and forth, And one of the things that I have noticed, I don't really track my stats, but one of the things that I've noticed a great deal in my career is when I am less involved in these markets not going anywhere, just trying to pull a few bucks out of the market. When I'm less involved in that back and forth trade, I do much better when the markets are moving, And so I would prefer to sit this out because I'm waiting for some market movement, either based on the PCE isn't going to do anything today, but tariffs, the Supreme Court decision, or FOMC next week, and the beginning of rollover, which is always exacerbates volatility, and it's going to be a decent trade. Going into the week after, there is no reason for the market to move today. Unless, of course, the Supreme Court decision comes out, which it could, and we are waiting until then. So very low volume, very nothing, and we just kind of sit around, keep our powder dry, and wait.
Yeah, no, I hear you. That's the crazy thing, right? So the Supreme Court decision, it's a case of it's planned news in the sense we know it's coming, but it's unplanned news in the sense that we don't know when it's coming, and it's
Right.
going to have an impact.
Right. So, as my favorite scripture, one of my favorite scripture passages says, "Stay sober and alert. The devil is roaring like a roaring lion looking for souls to devour." So stay sober and alert. You stops, be ready if you've got positions on, because the price action is looking for money to devour, and it will devour yours.
Yeah.
If you're not ready, if you're not safe, you got to just be ready, because anything can happen in this. It lulls you. This price action, and that was kind of the point in my tweet yesterday. This price action can lull you into a sense of overconfidence, if you're a shorter term trader, or this price action can lull you into a sense of complacency, one or the other, which case is very dangerous, or both cases are very dangerous, or could be potentially dangerous. And then, somebody on Twitter had mentioned buying, if it comes out bad and we break it, it'll be buy the dip. Okay, it might be a buy the dip situation, but I don't make market calls, and I don't trade my market calls. And I don't buy dips, and I'm never going to pick a bottom, and I don't pick tops. That always will catch up to you. I'm going to trade my process. I see trades that take shape 50 times a day that I don't take because they don't fit my methodology. They don't fit my strategy. I have to protect myself every chance, every trade I can get. I have to protect myself 1,000 times out of 1,000 so that I am here for those big trades that make my week, that make my month, that make my quarter, that make my year, that make my career. And if you survive long enough, you will have those career making trades. Everybody does, but you have to survive. Because again, look at 90% of you are going to fail. That is just the case. I've backed at least 100 traders with my own money on the floor, off the floor, all over the place. I've been a partner in an FCM. I've owned my own prop group, real prop, not funding company stuff. And I know what works and I know what doesn't. And one thing I will not do is there's only 3 people whose technical analysis I trust because I know that they're looking, and including me, because I know they're looking at the right stuff. I'm not going to take trading advice from somebody who speaks confidently and anonymously, because it's dangerous. For every good call, there's 50 missed ones.
Well,
Be
you're
careful.
you're not anonymous.
No, I'm anything but.
You are an open book, but no, you're a great follow. I love when you post stuff up there for sure, whether it's related to trading or personal or whatever it is. That's the first post I read and I think about. So I appreciate you doing that.
Well, Jimmy, I post a lot when the markets are interesting and there's things to talk about according to, my process or just, the technicals that I see. I'll post it, and I'll rapidly post it. My brain works very quickly and I'll just start rattling stuff off in the middle of doing things. But for the most part, I tweet about about the way that I live my life because the way that I live my life, my spirituality, my emotional health, my mental health, my physical health, that is all going to play out on the screens. And most of you are going to neglect that, or not put the right kind of effort into it, and so again, you're going to puke yourself all over the screens. You're going to puke yourself all over your trading. Bring who you are to your trading, and so that's why I try to stay away from the negativity on Twitter. At least, especially the last couple of months, I would read too much political stuff, and there's a little bit of everything to offend everybody. Catholics are terrible. The left is going to destroy the country. The right are fascists and Nazis. Muslims are trying to take over the world. The Jews are blowing everything up. The white Anglo-Saxon Protestants are killing it. None of that's the case.
I know. And but Pax, this has been the news since the dawn of time.
Right.
I mean,
My point. Yeah.
If you go back and look at even the campaign ads for when Lincoln ran for president,
Yeah.
they were brutal, horrible, lying pieces of information, and
Right.
it's just always going to be the case. You just got to shrug that off, man.
Shrug it off and focus on the beauty of life because the world is not as divided as what social media is going to tell us. I walked down the street and not everybody's looking at everybody side-eyed. Turn around and build community wherever you go. If you can turn around and talk to somebody who doesn't look like you at Starbucks and make that person feel like they're the most important person for the 3 minutes you're talking to them, then you're doing something right. Then you might put yourself in a position to be a long-term profitable trader. Here's something that most of you will not get and you'll shrug off. But I guarantee you that this is the case. If you do not know how to love and be loved, you will not sustain success as a trader. Go right about that. Think about that for a month or two. If you do not know how to love and be loved, you will not sustain success as a trader, period. No matter what time frame you're looking at, no matter how much you try to program your algo, it is a fact.
Yeah.
Deny it, and you can pick me up in your Uber in a month.
Yeah. Well, I mean, not only that, you never know. You don't know you're talking to somebody you just met, or you're talking to somebody you've known a long time. You don't know what they're going through in life, right? You have no idea, right?
No.
They're going through something. Everyone's going through something. So just to kind of have that generosity of openness is important, I think, and it does make you a better trader for sure.
Yeah, of course. Right. And if you're on a path of being becoming better. My mom would always say, be better, do better. If you are on that path of, it's cliche to say to be the best version of yourself, but if you're on that path to be the best possible version of yourself, then you might put yourself in a position to be a long-term profitable trader. I don't care what somebody makes in a month, a year, 2 years, 5 years, or even 10 years. It's not impressive to me. Social media, the cars, the houses, the whatever. I don't care about that, and I'm not impressed by it, because this business will change, your life will change, your health will change, all those things will change, and that money will dry up. Okay, and then what are you going to do? Divorces happen, people die. Right now, the only true measure of success as a trader is what you take with you when you are done trading for active income.
Yeah.
The odds are against me, and I've been doing this for a long time. That's why I live my life the way that I do.
Yeah. Well, great stuff, man. Let's talk a little bit about this low volume here. I mean, so you know this, and a lot of folks who listening to us on InterTrade Live know this. I've spent about 20 years being a retail futures broker, which means I'm, in the office every day talking to traders from around the world, 10, 12 hours a day. Throughout every season, and going into this month of December, particularly a couple weeks before Christmas, you never know what kind of volume you're going to get. You never know what kind of participation you're going to get. Generally, it's pretty good, especially recently with so many folks flocking to the futures markets because they're so efficient and so great to trade. But this week, I was kind of surprised that we're slowing down from a volume point of view so far. Should I be surprised at this or no?
No, no, of course not. We have no market drivers, Jimmy. And always look, one of the reasons why I really love the end of the year trade. This is the end of the fourth quarter and the beginning of the first quarter are absolutely my two favorite times to trade. Now, the volume will be lower. I expect that. The volatility, though, not necessarily lower, and that's part of what I like about thin markets is that they move quickly, both on the upside and the downside. And I like that because I can add to my positions. But, there are no market drivers this week. There's no reason for us to move beyond this bit of a range that we're in until there is some news driven event, or I heard Blake. I love listening to Blake. I'm not a currency trader, but the one of the things that he talked about today was the Mexican peso hitting the highs for the year, and that is bullish. Reading the capital flows is something that is it's not, there's no exact science in this business, but learning how to read the capital flows between the markets is something that is very important. I'm not going to make trades based on that, but it's something that's important to pay attention to. So do we rally as a result of that? We could, I don't know. Do we break like mad because tariff decision comes out in the middle of nowhere, and we could. In the meanwhile, if when the market opens, if there is no velocity to the trade off the opening range, then I'll keep my powder dry. I'm going to trade the mini micro spread this morning, sponsored by CME Group, to show everybody how to trade, how to learn how to, kind of for a lot of reasons, but to learn how to trade in a much more effective way with smaller positions, smaller size. But it's really a decision, as one of the things that Anthony says, or that I lifted from him, was go big or small or not at all, is really trying to decide when it is for you to trade bigger, add your size, trade smaller, or not trade at all. And that has to be something that's objective, at least, or subjective, that you're going to live by, rules and guidelines that are going to keep you in your lane and help you protect yourself. Because again, it doesn't matter what you make in a year, 5 years, or 10 years. Only true measure of success is what you take with you when you are done trading for active income.
So Pix, I mean, is it subjective or technical when you decide whether or not you're going to go small or big?
Well, that's why I changed the word. So the market's doing one of three. Objectively, the market's always doing one of three things. Always. It's going higher, lower, nowhere. And it's going that way for everybody in the world at that time. So it's objective. Yeah. But the subjectivity comes into play in how you are determining that. I'm going to determine that from the opening range, and that's how the HFTs and the algos, and that's how the funds and everybody that moves these markets are looking at it as well. So I'm going to choose to use that. Some people are going to make it, shorter time frame entries, a 5-minute chart, 15-minute chart, and they're going to trade the breakouts from there. And and that then, is an objective way of subjectivizing this, if that makes sense, and making it yours. Um, Another part of the danger of taking all of this advice from somebody that sounds confident, that you don't know, is that you don't know what they're looking at. Plus, you don't know, well, the point of that is that, you've got to make it yours. Okay, be careful taking somebody else's advice. Take a process that works, that's proven, consistent, repeatable, scalable, and then make it your own, whether it's a short-term chart, long-term chart, or swing trading, or my stuff, or whatever. Just learn how to make it yours. Objective becomes subjective, with guidelines and rules that will protect you every trade you make, so that you survive to thrive.
Yeah, absolutely. I mean, if you take 100 discretionary traders, put them in a room, are you even going to find two that do the exact same thing?
No, no, and you're also gonna you give the same exact chart, the same objective chart to 10 different technical analysts. You're gonna get 1,000 different responses. So yeah, and all of it, most of it, is going to be. So here's another nuanced aspect of it. If I give the same chart to 50 different technical analysts, I'm going to get 3,000 different responses, all based on their opinion. Not all of it, but many of it based on their opinion, making an objective sense of reality subjective to them, based upon their positions, based upon their book, based upon what they're thinking. And that becomes dangerous. I don't want. One of the best traders I ever met, a guy named Mark Variano. MPV, his badge was. He's still trading. He's a phenomenal guy and a phenomenal trader. I ran into him during COVID. Our sons played travel baseball in the same place, and we were talking about what great trading it is. We were talking about how we're the only two guys in the Nasdaq still trading. I can see I'm moving my hands on the screen. I can see it, above me, like Gavin Newsom. I'm going to stop doing that. I look like an idiot. But so when I ran into Variano last, and I run into him around the city every so often, I said to him, so what do you think? Oh, this is great trading. Oh, it's huge trading. It's great trading. And I said, I'm short, and I've added, and this is what I'm doing. And he said, stop. I don't want to know what your positions are.
Yeah.
I don't want to know what your opinion is, and I do not want to know what your positions are. I don't want your opinion, because he knows I'm a good trader. I don't want your opinion to affect mine. I don't want your positions to seep into my mindset, my process. So I'm very careful in maintaining that thought process myself. And I said, you know what, you're right, Mark. I'm sorry. Yeah, but objectively, this is great trading, isn't it? Oh, it sure is. Does that make sense?
Yeah, no, totally. I mean, we have a subconscious mind. I mean, we're absorbing stuff even if we don't think we're absorbing it.
Yeah, right. Exactly. 100% right.
Yeah, so that's awesome stuff, man. Oh, so right now, I mean, I did a little bit of math. We're down about 15 handles so far pre-market. For Tracy doesn't see a reason why, but we're down a little bit. But overall, we're only about 1% off of the all-time highs in the S&P. And when I did that measurement, Pex, I was surprised because, we had that kind of big break and now we're kind of back up to that level again. Walk through how we're talking all-time highs, not just annual highs here. So it's been a crazy kind of grind back up.
The other thing, I looked at something the other day, and this is more an observation than it is I don't know, an opinion or something, but the S&P is up 40 something percent off the lows of the year. The
Yeah.
Nasdaq is up 60 something percent off the lows of the year. Isn't that crazy to think about? I mean, it's nuts. And the fact that we're down 1% off the highs, it's not bearish. I mean, it's in a broader sense, it's not bearish. But you and I have talked about this since September 20th. You can go back to almost every show. our quarterly pivot is 66.58 in the S&P. That upside target then is 69.80. That is the upside target that I get mathematically based upon that level, 69.80. And everything in this business, whether you like it or not, is subjective, is objectively math. So 69.80 is the upside, long-term upside target. And then, Craig and I talked about this since we were in Naples, and then on our shows on Sunday nights too. And you and I have talked about it. Once we get to 69.80, then I think the market in the beginning, and we'll do that in December. And once we get there, then this market, I think, is going to have a lot of more volatility, a lot more downside price action, maybe some bounces, or maybe we just sell off and burst part of this bubble. I don't know, but again, not a call. I'm not making any market calls. I'm simply going to trade my process. If we get above 69.80, I'll be long. Believe me, we're going to 7,300. But that's what I think. These charts look very similar to 1999 and early 2000 to me. Now, whether that extends higher, well, if it does, crazier things have happened. I didn't see the rally off the 2174 lows during COVID up to, the high of the year was 3758. I didn't see us rallying from 2174 to 3758 in less than a year, when the world was shut down either. But that was still a tremendous year.
Yeah, and if I could pop up a chart, I'm going to pop up a chart real quick, just the daily S&P chart right now, and you that's 68.58. You said 68.58, right?
No, 69.80. 66.58 is a quarterly pivot.
Yeah. Okay. So I got the 69.80 there. But when I look at this chart, just from a longer term point of view, from a technical point of view, I see, this is a daily chart, right? We see higher low, higher low, higher low, higher low, higher low, just nonstop higher lows. And then kind of close to nonstop higher highs. But this is just this, when I think about momentum, forget about the MACD at the bottom of the screen. I don't care. But it just seems like, we do want to get up to that 69.80.
Okay, but here's the fly in the ointment. And there's a lot of them. But here's the fly in the ointment that I think that strengthens the case. March, which next week starts rollover. March S&P is trading at a 60 handle premium, 60-point premium. So right now, March S&P is trading at 69.23. I have old eyes, but if my eyes are telling me the truth, it's 69.23. So yesterday's high in the March was 69.30 something. That's 50 handles away from 69.80. So will we trade it in the front month, or will we trade it in the tradable month? Because March is the front month. Will we trade it in the tradable month, which is still decent until volume rolls, which will be Monday, the whatever date that is, Monday the 15th, I think, or something. Yep. Or will it be in March, or will it be in D's? One way or the other, it's going to trade. It'll trade there. And if it trades there in March before we roll there, then I'll feel cheated, but also vindicated. Here we are. There it is. But
that's a great point. That's a great point. We haven't been talking about this a lot on Ninja Trader Live, but these stock index futures are going to roll. They're going to start to roll next week.
Yeah, roll starts next week, and then culminates, picks up later on in the week, and then culminates with when the volume rolls. When the volume is heavier in March, that becomes the lead month, and so or the tradable month. Yep. That will be a week from this coming Monday, or as late. We've seen it as late as Tuesday. Used to be, Jimmy. It used to be Thursday, right? Thursday of next week. But as the cost to carry as interest rates have risen and the cost of carry has increased, the spread between the two. We see the roll happening later. So, open interest, rollover, for those of you that don't know, is when open interests from the tradable month rolls to the forward month. So D's to March in the indices. Open interest is the amount of open contracts, open positions in a given futures market. And those open positions are going to they're going to roll, they're going to move, and for the vast majority of my career, it has been a tick or two tick or maybe a point difference between the 2 months. But since 2024 and everything
Yeah.
has kind of rolled, rates have skyrocketed. Cost of carry, the spread went from 5 points to 15 points to 20 points to 60
Yes.
points, and we've been
Yes.
around 60 points now.
Yeah, that is so true too. I've noticed that also. And that spread, that bigger spread lasts longer into the pace of the roll.
Yes, yes, exactly. So it's kind of screwed everything up. So some of your front ends will roll on Thursday or Friday, and you're going to have to manually roll them back. I will not trade. Well, that's not true. Okay, I was going to say I'm not going to trade that rollover day, but that's not true. If the markets are volatile and I have positions on, I will trade them. But I will be very careful in trading those days. I will be very careful in initiating new positions those days. That's what I should say.
Yeah.
And from a week from today till Monday, even to Tuesday, and then of course we also have non-farm and CPI the week of expiration.
Mhm.
So I mean, we've got next week, we've got market drivers, we've got reason to move, and the week after, and then we're in the end of the month, end of the year, end of the quarter, end of the month, end of the quarter, end of the year trade, and that usually very quiet leading up to Christmas, but then there could be some price action and some very good movement around that time. So I mean, a lot of the big players will be gone, and that to your point earlier, Jimmy, that will decrease volume, but
Yeah.
that doesn't necessarily mean that there's a decrease in tradable volatility.
Yeah. So Pax, I do want to remind everybody that today's segment is sponsored by the CME Group, where risk does meet opportunity. So I just wanted to remind everybody that for these great CME markets that we live on.
That is where risk meets opportunity is a great description of trading the minis and the micro spread, where risk
Yeah.
meets opportunity. Learning, if you trade in a 2-lot mini, you've only got two choices to manage your profit. If you trade in a 2-lot mini and trade out in 20-lot micros, your profit management opportunities exponentially open. And you learn how to trade.
Yeah.
You learn how to add to your positions without necessarily adding to your risk.
Yeah, I love it. I love it. I love it when you do it, when you demonstrate it. I don't know if we're going to get into it today or not. If we do, great. But it's a concept. It's an idea that when the micros first came out. Let me go back in time. When the micros first came out, now remember, S&P used to be really a big contract, and then they watered it down. And then it became a smaller contract. Then it became minis. So when the micros first came out, I kind of rolled my eyes. I'm like, what is this voodoo? Come on, really? But I'm a super fan now because number one, we're not trading at 1,000 anymore. We're trading at near 7,000, and there's a lot of meat on the bone, right? Because our ranges are bigger.
Yeah.
So
Right.
that's number one. And then number two, you have this kind of fungibility between the two, so you're able to actually spread against each other if that's part of your strategy.
Yeah, right. Right. There's a lot of there are a lot of benefits. Look, yeah, I mean we all need to leave ourselves open to we all need I don't know if this is going to make any sense, but it does to me. We all need to leave ourselves open to the good things that the market has for us. And we need to look at the market as having good things for us, not looking at the market from a negative standpoint. Oh God, I'm nervous. Oh, holy shit. I'm scared. What am I going to do? If we come to the market, if we come to our trading day with that sort of trepidation, with that sort of fear, then that sort of trepidation and fear can overtake our decision making, and we start making decisions based upon emotions and feelings, and not so much on a uniform set of trading rules and guidelines. You know, how many times have you guys had, all of you? How many times have you guys had an experience where I've got a plan, I'm going to execute the plan, and then ba-boom, you blow the plan out, you throw it out the window, and what happened to your plan? And at the end of the day, you're licking your wounds because you threw your plan out the window.
Yeah.
Well, that happens because we come to well, for a lot of reasons, but we allow our emotions to enter
Yeah.
into our trading, and
Yeah.
that becomes a very difficult thing. So if we keep it if we keep our trading about our plan and about our process, and we protect ourselves at all times, and we leave ourselves open to the good things that the market has for us and not the bad things, because we are protected against the bad things. We protect ourselves. Stops. We protect ourselves by not standing in front of freight trains and running the risk of getting flattened. We protect ourselves in a million ways.
Yeah.
And then we leave ourselves open to nothing but positive things.
So, but that is part of the new trader journey, right? Part of the new trader journey is you're going to have this phenomenon where your plan's out the window, your emotions are taken over, and especially if you're an aggressive personality. I'm kind of an aggressive personality with respect to stuff like this.
Not me. I'm not.
I know. Come on. Anyway, but that's part of the like it or not, that's part of the experience. Especially when you go from sim to your first live trade account, you got dopamine and all sorts of stuff going on. Adrenaline kicking in, and it's usually it's a great feeling, but it also kind of changes your mentality.
Look, all right. So, all of the understanding the chemical reactions in our brain and understanding how our strengths and our weaknesses come into our this is another line from Anthony. Anthony steals my shit all the time, and I'll still I still his. Is trading is a journey of oneself. And that's a corny thing to say, I think, of oneself, but it truly is a journey, because you have to understand those things that Jimmy's talking about. You have to understand the things I'm talking about. I've had a very well-known and storied career in the last 28 years. I've had a lot of really, really high highs, and I've had some really deep abyss-like valleys. I know what works, what doesn't. I have matured as a man, as a person. But that takes a toll on all our lives. I neglected my health. I smoked my brains out. I drank too much. I didn't lift weights. I didn't run. I didn't work out until after I went broke. I was carrying all kinds of baggage from my life. I was making my trading so much more about my emotions than about my process. And I'm talented, and so I was able to kind of survive through it. But I didn't maximize it. Now I'm 57 years old, and I'm in the best physical shape of my life. I've had cancer, and I've got heart problems. Here, I'm wearing a heart monitor now, and if you guys are going to neglect that shit, you're going to find yourself my age in this kind of shape, looking this good, wearing heart monitors. I've got AFib, which causes heart failure, and that shit is partly genetic, but it's also partly due to the tension and the stress that this business brings. So my brothers and sisters, take care of yourselves in your 20s. Yeah. Take care of yourselves in your 30s. Take care of yourselves in your 40s. Don't wait until 44 to decide to go on a health, 45 to go on a health journey and get your shit together. Yeah. And do not wait that long to get your emotions together. Don't wait that long to get your spirituality together. Do it now, and you will put yourself in a position to be here thriving when you're my age, making the decisions that today's a day I want to spend some dough. Today's not a day, and your emotions become less involved in your trading, and you will learn how to increase your size. Your stats don't matter. How you go big, go small, or not at all do.
Well, you've inspired me. I'll be honest with you. I am now lifting weights, like going back to high school, like lifting weights every day. And Mrs. Keggs is kind of like, yeah, you should do this, so you're less likely to break your hip later on. So you get in there and lift heavy weights. So I'm doing it because of you, man. I saw your snapshots at the gym, and I'm like, all right, if Pax could do it, I could do it.
To be clear, I have no plaque. My arteries are as clear as a baby's ass. I have no plaque in my arteries. Okay. Please understand the difference between what I'm speaking of and what I do. And you guys don't give out health information to somebody unless you're an MD or a functional doctor.
Yeah, but you definitely want a 0 on that C scan. You want that's the one test you want to score zeros on.
Yeah. And mine are I've had when I was in the hospital the first time for all of this, and my heart rate went from, I have bradycardia. I have very low heart rate, which is why I'm wearing this, and I'll need a pacemaker eventually, and if not soon. And my heart rate had, when I had gone into heart failure the first time, my heart rate had dipped to 15 to 17 beats a minute for a couple of hours. and and my blood pressure was hovering around 50 or 25. So I had they gave me an angiogram once they stabilized me a few days later, and my arteries are perfectly clear.
Stop,
So
Phil.
that's good because I do eat well, I don't drink, I do all of the things that you're supposed to, well, I don't drink much, and I do all of the things that you're supposed to do in life. But again, as I said earlier, I didn't start doing them until I was a little bit older. So make sure you take it seriously, because I'm telling you, as I said earlier in the beginning, and Jimmy and I both were talking about, you will puke yourself all over the screens. However you're living your life will play out in your trading, and that will determine your long-term profitability. It will.
Yeah, I gotcha. Well, let's calmly keep our brush pressures down and look at this Nasdaq right now. I'm going to pull up a chart here in a second. There we go.
Order
Stop
filled.
filled.
So similar than we're not as close to that all-time high, right? We're not close there, and
Order filled.
just not too far off of the all-time high is pretty close to that November high. I'm tracking 26,274 for that right now, but we have the same thing, right? This chart looks the same. Series of higher lows, series of higher highs. Moving averages are crossing up nicely. V-shaped recovery, whatever you want to call it. Let's throw out some numbers here
Stop
for this
filled.
market, Pax.
For the Nasdaq.
Yeah.
All right, hold on. Let me figure out. I gotta. So the Nasdaq quarterly pivot is 24,568. That.
Hang on. 20. Say it again.
Oh my own. 24,560. Sorry, I lost my chart. 24,568.
All right, I'm with you on that
All
one.
right.
I'm gonna pop that
So-
in the machine here. All right.
That gives us an upside. This will tell you how much stronger the Nasdaq has been in this rally. Anyway, 60% versus 40%.
Yeah.
So the upside target in the Nasdaq that corresponds with 6980. Remember we were talking about S&P at 6980. The corresponding price there is 25,907. So that's the ultimate goal in the Nasdaq. The Nasdaq has already reached that level. And then it exceeded it when it made its high of 26,390. No, what the hell is the high?
Yeah, 399.
Yeah, 399. Thank
Yeah.
you. 20. I was going to say, yeah, 26,390.
Yeah.
Okay, so 26,399. So the Nasdaq has already achieved that 25,907 level, which is And by the way, these levels that I'm talking about will never change. In 25 years, if we make a high of 50 million and we come crashing back down, 26,507 will always be what I call a macro zone. It's just math, and the market always remembers these levels. We saw that in the April, in the February, March, April volatility and May volatility in the S&P. Every single one of those levels that I talked about are objective levels that don't change. So anyway, above 25,907, the S&P is going to target up to 27,240. So can we get there? Of course we can. Crazier things have happened in my career than the Nasdaq turning around and rallying 2,000 points in the next few months. But I don't think it happens. My guess and my opinion is that the S&P will settle in at 6980 in some way, or will not settle in. It's settled in now, and it will drift up there. And then by the end of the year or in the beginning of the year, and then we start to see some downside sell-off. We'll see a big sell-off, and the Nasdaq achieves 25,907 in a similar way and then sells off again. Now, again, if we get above those levels and we start to rally into the new year, if we are above the early opening range, I'll be long. If we are above my new quarterly pivot, I'll be long. If we are above my targets, I'll be long. I will not start selling I will not start selling the indices just because I have an opinion that we're going to sell off at the beginning of the year. Not going to do that.
Yeah. All right. Well, let's get focused back on some of the spreads and stuff. Do you have charts up or no?
I do.
Let's do it.
I'm hungry. I should have eaten. All right.
That's all right. You could the food will be there when you're done.
Yeah, I don't like eating before I trade. I don't like eating. I don't like eating in the morning. It slows me down. So what I do is I'll drink, and I don't drink coffee anymore because of the ticker. I will drink a protein shake, which has a little bit of caffeine in it. But all right, now listen here. Thank you, JC Trades. So listen, yes, I have not seen any real reason to deploy capital in this market. And we had a really nice rally on some reason this feels right here. We had a really nice rally on Tuesday out of the opening range with the 15 handle rotations. I don't know where my rotations went. But we had, I gotta fix my chart. We had a really nice rally Tuesday out of the 15 handle rotations, but there is really unless you're trading that, unless you're in front of the screen, Susie, and I wasn't, you really have to kind of keep your powder dry and look for really, really safe entries in something where instead of risking money, what's your risk reward ratio? Don't have one. I spend money to make money, and I'll show you how to do that. I'm in and out right away, and right or right out, RORO, on every trade that I make. So, and that keeps that keeps losses, expenses for me, business expenses. So I'm willing to spend money in order to make money. So I am going to trade the minis here. I'm going to trade in, these are the minis. So I'll trade 2-lot minis. And then I'm going to trade out in micros, 5-lot micros. Okay, so these are the minis next to the micros. So what that does, though, now if I trade now you can go ahead and trade. Somebody always asks me this: why don't you just trade 20-lot micros? If you do that, you're going to spend. Ninja might not like me saying this. But you're going to spend a ton of money in commissions. And as traders, commissions are the cost of doing business, but they do matter. Again, another subtle nuance that need to be balanced. So you want to keep your commissions or your fees down as much as you possibly can, while still giving yourself the opportunity to be able to manage your positions in stage, or manage your profit in stages, and giving yourself the ability and the permission to be able to add to them without adding to your risk. So this is a way that I've devised or come up with, and some principles that I learned when I was trading spreads in the hog market on the floor, to help traders that are a little bit underfunded, or traders that are trying to trade micros but would like to trade minis, to segue in from micros to minis, or just learning for lack of a better expression, the theory behind trading, the theory and how to add your positions, the theory and how to take profit in stages. So most traders are kind of in and out. Like, you trade in with the 1-lot, you sell a 1-lot at 70, you trade out, you buy 1-lot back. You'll limit the amount of money that you make in every circumstance. You sell 70s, you buy 68s. Well, that's good. That's a good 2-point trader. You sell a 2-lot at 70, and you buy one at 68 and one at 65, and the next trade is 20 lower, and you're left holding the bag, or you're not holding the bag, you're left holding your shoe. When if you would have sold a 2-lot and bought 2-lot at 70, bought 5 micros at 65, bought 5 more micros at 45, you still have 10 micros to trade out of. Now you're onto something. You're taking more out of the market. And if the market decides that it's going to roll over through that level, now you're short 2 minis, which I'll show you, and you're long 10 micros. If the market rolls over through a very important level, you can sell back your micros, and you're short 2 minis.
Yeah.
You just add it to your size without adding to your risk.
For the folks that are new to the micros, they're 1/10 the size of the minis. So there's that 10-to-1 ratio between the two.
Isn't that funny? When we were on the floor, the NASDAQ was $100 a tick per 1-lot, and then they came up with with the minis, and the minis are like where we would send our clerks, or the guys that we didn't think really had the chops to be traders. Now the minis are the big contract.
Yeah.
I still think that is kind of a funny thing.
Yeah,
but the micros are a great way for micros are a great way for retail traders to trade. Because your risk, or the money that you're going to spend, is lower, and it's a lower cost to entry. It's a lower barrier to entry.
Yeah, and exactly. And we're going to see it live in action, you guys. Pex is going to pull the trigger on some of this, but just to see that, the ability to scale out, the ability to scale in, it's just a terrific strategy. So I'm looking forward to it.
Yeah, it is. It's a very good way of trading. And I understand, I see a comment, wake up, Pax, your mini micro strategy is great. I know that most funding companies do not allow it. Some do, Leo and Kane the other day were talking about how a lot of the funding companies slash prop groups are starting to allow you to trade different strategies without having to reset you. Now, so look for that, okay? Look for those companies that are going to allow you to actually learn how to trade, as opposed to just kind of reset you constantly so that they continue to make money. They do exist. I'm not exactly sure which ones they are. I'm not as up and familiar with them as others are. But please take a look at them. Do your homework. Don't be lazy, okay? What you will get out of this business, you will get what you put into it. If you want something for free, think about what you're getting. If you want free information and free this and free that, you will get what you pay for. I know Lucid is I mean, there's a lot of them that are very good, right? They don't pay me, so I'm not promoting them.
Well, all right. All right.
I have nothing. I have nothing bad to say. Look, I'm not saying anything negative about them because look, these funding companies have brought in a lot of young traders into something that they never would have thought of doing. This is in spite of the fact that I'm wearing a heart monitor, I got health issues from this. This is the greatest business in the history of business.
Yeah.
And in a world that is rapidly, I went and bought a $12,000 mattress the other day and nobody was there to help. I went into the store and nobody was there. There was no short little fat bald guy that was looking to rob me. It was all done on a computer. That is the way that everything is changing. You can buy a cell phone without people. You can buy a car without people. Carvana, all these things. So all of these jobs that used to exist, that people used to be able to go to, that are being segued out, and the world will look completely different than what it does in 25 years, but trading will be here. So now all these funding companies are bringing in all kinds of people into futures trading, and that enables you to learn how to do this and provide for yourself and your family in the manner in which I've been able to, and many the rest of us have. But just take your time. It's a journey. Give yourself the ability to embark upon that journey. Give the market your time, not your money, and these funding companies allow you to do that.
Yeah, I mean, a lot of us old guys haven't never done it. I've never done it, but my brother's a super fan. I mean, he's involved in them all the time.
Yeah, right. There's a lot of benefit to them. And there's also a lot of things they teach you bad habits. Some of them do, not all of them. So do your homework, get what you put into it. Cause I really cannot tell you, this is the greatest business ever. Okay. And AI has already changed it.
Yeah. So Pax, we have about 8 minutes to the bell here, and I think Music City Trader has got me. Thank you for that 10-minute reminder. So we have your opening range indicators up on the chart. We're gonna see that your rotation levels, and we look for entries, right, based on that 30-second OR.
Yes, based on the 30-second opening range. Yes, sir.
All right. So, and then you have, again, folks, you could actually get this from Ninja. We'll go ahead and post the link to. If you're using the desktop platform, to Pax's OR setup here.
Let's see if they populate right here. I might have to change it real fast.
It's all right. You got time. We got at least 7 minutes. 7 minutes is an eternity.
There seems to be an issue with it. Okay. Oh, fuck it. Too late now. Cancel, dude. All right. Now, I'm not anticipating much out of this market today. Off the open, I'm not anticipating that much is going to happen. The 30-year bond is 30-year. We didn't really talk about the 30-year metals. The 30-year is rates are going higher, and it's starting to look like the 30-year is getting, the 30-year is about ready to take out this 115.25 area and trade down to 114.14, I think. Yeah. So, we're under the quarterly pivot at 116.25. We're under some great support and resistance, which is now resistance at 116.12 to 14. And now we've got this sort of, I mean, we keep flirting with this bottom from the week, which we were talking about on Wednesday, Jimmy, like 115.28.
Yep.
We took it out by a couple of ticks, back above it. So if we close, if the 30-year bond closes weak, then that later on this afternoon, then that will have reverberate, and currencies that will have reverberating effects on the indices. Earlier in the week, the story in the market were the metals. You got copper breaking out, silver is all over the place. I'm sorry to Dr. Copper that I called it the Russell of the metals, because it's been a great trade.
I can see how you could think that, but I am super bullish on copper right now. I think we got a lot of room to go on the upside.
I think so too. But yeah, and it sucks. The reason I don't like copper is it sucks me in and then it just dies. So I don't know. Yeah, you're right. It does. And I've got to find a place to get long. You got Bitcoin, which I think is super interesting. Bitcoin is between a lot of very important long-term levels and targets, and lows. And it's sitting on a precipice of either a bottom or destruction. But it's lower on the year. The Bitcoin opened the year around 94,000, I think, 94, 95,000. And, and it's traded down to 84,370, which is the 100-week moving average. 1, 2, 3 times we bounced off that level and keep trying to, on the weekly, and keep trying to rally. So, in Bitcoin, you have to kind of zoom out. You look for, entry prices from shorter term charts, but then zoom out to try to figure out what where we have massive support and where the stops will be under.
Yeah.
And then of course we have the lows of the year, which is around 74,000 back in April.
That's going to be a double. That's going to be a sweet double bottom if we get there and it holds.
Right. And I'll buy them with both hands and feet down there, but I'll pitch them real fast underneath it. Because underneath 74,000, we take out 74,000, we'll trade down to 50.
Yeah.
But I'll buy them. I'll buy in between 75,000 and 80, and I'll pitch them underneath 74,000.
Yeah.
Right or right out. So, okay, that's the story, right? Now, in the indices, we've got the minis and the micros. So, go big, go small, or not at all. For me, this has been either a not at all or go small trade. So if I'm going to go small, if normal units for me can be anywhere between 16 minis to 8 minis, right? So if I don't feel it, if I don't see it, but I want to be involved in the market, I can cut my size to a 4 lot and trade in and out that way, or I can cut my size to 2 lots, and trade out in 20 lots, which gives me quite the ability to be able to take more out of the market and to be able to learn how to add to my position so I can learn to go big. I can go from a 2 lot to a 20 lot pretty quickly, especially when I've got profit locked in and I still have runners on from higher or lower, so let's see if we get that opportunity today. I don't think we do, but I will be here for it and I will lead you through it too. And if you have any questions about any of this, please do not hesitate in asking in the chat. I'll after we open, I'll be paying attention to what the chat says. So I'll try to
keep in mind too. I mean, these spread trades aren't just for the mini S&P. I mean, the Nasdaq, you could do it. Crude oil, you could do it. Gold, you could do it. Copper, you could do it. So the CME's got a lot of asset classes covered here with this 10-to-1 relationship.
CME did not come up with the idea of the micros for retail traders. However, retail traders have learned to use them and utilize them, and that CME is happy about. That CME is proud of, because retail traders have, I don't like the word retail, independent traders have learned how to utilize the micros in the strongest sense, and that CME, as evidenced in today's in our segment here, CME loves that. So,
I mean, you look at it in context of risk capital and leverage. I mean, they're great markets.
Great markets. And not designed for us, but utilized by us. So my brothers and sisters, let's rock and roll, dude. Let's make this work. If there's something to do, let's fucking do. Here we go. See, we get closer to the open. My language changes. I'm sorry.
Keep your blood pressure down, man. That's all.
My blood pressure is always low.
Oh, that's right. You just said
but that doesn't mean that my intensity level is.
Yeah.
So look at the uncertainty of every trade is something that drives us crazy, right? It drives most traders nuts. Oh my gosh, what's going to happen? The second I initiate a trade, and I'll show you, and the market goes a point in my favor, and I put in a stop, to protect myself at a scratch, that is a certain outcome. I cannot lose money. All right, we've got less than a minute. So do some box breathing. Breathe in 4 seconds, hold it. Breathe out 4 seconds. Lower your blood pressure, lower your heart rate, slow your mind down. So what everybody else sees on these domes, chaotically, you see in slow motion. That's been one of the great benefits of my entire career, is that all this stuff slows down for me.
Yeah, that's a skill. That's a superpower.
It is. As a clerk, that's what made me such a great clerk in the front month euros, and what made me such a great trader on the floor.
Well, being
and
a
also
clerk
here,
refines those skills.
does. And here we go. 3, 5, 4, 3, 2, 1, open. And nothing. There's absolutely no volume and no velocity to this open. I like wider opening ranges. I don't like thin opening. I don't like close opening ranges. Wider opening ranges give us more protection in the chop. All right, my nudge. Here we go. So the bottom of the opening range is going to be 74.75 right here. All right, so this is a wide-ish opening range. Okay. All right, here we go. All right. Top of it is going to be 79.75. I'm long.
That's 5 handles right there.
There we go. Look, so I got long, okay, a 2 lot. So I'm going to pay for my trade 79. I have no risk on it because I already have a scratch stop in. 79.
2 lot in the minis.
Yeah. Okay, I'm going to pay for my trade. Ideally, I'd like to pay for my trade at the 15 handle rotation. Why? My rotations are not, my indicator's not working. I have to have Mike fix it. Shit. But anyway, 79. It'll be 95 is going to be the rotation. So ideally, I'd like to pay for it there, but I'm going to pay for 4 points. Okay, just to illustrate. So now I'm long 2, short 5. Okay, so I removed my risk. Long 2, short 5. You see this? Okay,
Which means your net is long 1.5 mini.
Or 15 micros.
Or 15 micros. Good point.
So I'm going to now, okay, I have no risk. So when I pay for my trade, paying for my trade is not about me taking profit. Paying for my trade is about me removing my risk, okay? So I've removed my risk. Now I'm looking for me to take profit at the 15 handle rotation, and that will be, what'll that be, 80 to 95. So I'll put in an offer at 94 in front of it. So now I'm working 5 at 94. Okay, now, all right, feet up. Easy like Sunday morning. I have no risk. I have no stress. Easy peasy, lemon, fargan, squeezy. Plus, this is a relative bullish opening range. Anybody know why this is a bullish opening range? 2 reasons. Anybody know why this is a bullish opening range?
We're not trading below your first rotation.
Well, right. Okay. 3 reasons. Yes. Open drive. So the low of the day is the opening range. That's bullish. We came out of the opening range on the very first attempt. That 2 is bullish. Okay. So those two things are objective. So when we come out of the opening range, usually I want to add, what I call the pay line, which is going to be 4 points from the opening range. But I didn't, I'm freezing. It's cold in my little office. I think it's like 10 degrees in the shy, Jimmy. It's cold.
Oh,
But
my Mrs. Keggs keeps this sub-zero at my house.
me too normally, but it's especially. I think I can see my breath in here.
Uh-oh.
I'm just kidding. So that's it, right? Easy like Sunday morning. Now, if the market comes back down to the opening range and scratches me out, and we take out the low of the day, I will sell more than a 2 lot because that's what is a bullish open is now not so bullish. So I have nothing to do. Okay, now I'm not really staring at the price action. I have nothing to do but to sit here and let the market either come down and scratch me out, or traverse up to 94 and put profit into my, put money into my pocket. I stay out of the way to market. See what I mean, Jelly Bean?
Yep.
There is Joe Bader. There is no 1 minute opening range. The opening ranges have been clearly defined by all major exchanges as the high and the low of the first 30 seconds since the Dow theory was invented in 1910. Other people have developed their own way of looking at things through the years, but I use the objective opening range as defined by CME Group. I'm not going to make up my own.
So Pegs, did you add on here at a certain point?
Above 90, above, let's see what the rotation is, 79, 89. It'll be, I should lower my offer actually to 90, 93. I will add above 95, and I will add above 93, 95. Okay, so yeah, I will add above the 15 handle rotation, but anywhere between, so anything between the opening range here and 95 is noise to me, and I don't trade noise. If I get stopped out, well, hey, no harm, no foul. I made a little bit of money, Here we go. 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 Let's rock and roll. So 94.75 is the first rotation. So I'm going to use 93.95. So I'm going to take profit at 93. I'm going to add at 93 and 95 if we get above that. Again, if we trade anywhere between, well,
so that's what makes I think makes you a little bit unique. Boom, you got your profit target in. Once it hits it, you'll take it, and then if it keeps going, you're going to add again.
Yes. Okay, stopped out. Now here's okay. Now I gotta. Shit, I didn't reinitiate.
Sorry, I distracted you. My bad.
No, you didn't. And it came down and ticked me out, and now it's back above it. Okay. I don't like pullback, so I don't want to sit here with the resting bid in here, but the pullback would have worked. Shit. Okay. All right, now I got him. See, that's okay. Here, scratch stop in. Fuck, scratched out again. This sucks. This is a bullish open. The market wants to rally. It just isn't rallying. I don't like pullbacks because normally there, if I work an existing bid at 79.75 and the market comes back to the opening range, I'll be pitching them at 79. But in this case, every time it comes back down to the opening range, it holds. All right. So I'll buy him here at the pay line. And I should have bought my micros back in at the opening range, but I didn't. 79, 80, 81, 82, 83. 83.75 is the pay line. So I'll put him back on here at the pay line. Still a bullish open. I just got ticked out and I didn't put him back on. I did put him back on. I got scratched out of him though. Holy shit, I missed that. Here comes the bullish open.
Oh. Come on.
And also, I'm not going to chase it. So if I don't get the 83.75s, I wait till 94. I want to be very precise in my entries and not in my exits. Why ES and not NASDAQ?
There you go. There you go.
I got them. There aren't too many traders that are actively trading that have traded as many NASDAQ as I have. I paid at one point in my life, in my career, I paid $110, $115, $100,000 a month in commissions. I was one of the biggest NASDAQ traders in the world, independent NASDAQ traders in the world. I don't trade NASDAQ. I trade S&P. God bless it. I got to stop looking at the damn chat and start trading the market a little. Okay, now, all right, I'm long again. Now stay bid above my entry price so I can show these fine people how to fucking manage this spread here. Go, you son of a bitch. Fuck. You dirty dog. Make it back to the, don't chop yourself up. If you guys are in my group, don't chop yourself up around the pay line. Fucking either wait until we get back to the opening range, or wait
Chop,
until we
chop,
get to the.
For the new folks,
What?
explain for the new folks, Pax, when you get a chance, explain Payline.
There's nothing choppy about this market. I don't know who just said this is easy. There's literally nothing choppy about this. I don't know who just said that.
It wasn't me.
Nothing. Actually, a very easy trade. Don't chop yourself up around the pain line, but this has been very simple. It's a bullish open. It's a very bullish open until we take out the low. The pain line is where it's two things. Okay, so the ATR is expanded when the ATR with the 10-day look back is above 50. I'm going to pay for my trade with 15 points, not 4. Okay, when the ATR is under 50, then I pay for my trade with 4 points. When I pay for my trade, as I said earlier, it's not about me taking profit. It's about me removing my risk. So I want a free trade on, right? If I buy a 16 lot, I'm going to sell 4 to pay for my trade. In these markets, I'm going to try to do that with 15 points. If we don't make it, I'll do it with however many points. But uniformly, if the ATR is under 50 points, then I'm going to pay for my trade with 4 points. One of the things that on the trading floor in the NASDAQ pit, when I was learning how to trade when I was coming up, and I helped create the NASDAQ. So in the NASDAQ pit, the opening range breakouts were always good for 8 points. And then once we got to 8 points, that was when, the market would decide that we would expand the range through it. Then the ATR grew, and that became the NASDAQ trades in 60 annual increments. Okay, now what was a bullish open, if we take out this low, won't be so bullish. Some traders in my group, I'm sure, got what we call fancy, which is selling 79.75s and then selling the bottom, which is 74.75. So you increase your size without increasing your risk. Okay,
Yeah,
so on the screens, when I sat down on the screens to try to decide what worked, I wanted to learn how to pay for my trade again. Where can I remove my risk? Where are the algorithms taking the market before they decide to expand the range, right? So I started to notice over and over, I trade the S&P, no longer the NASDAQ, because the NASDAQ is so back and forth. The NASDAQ gives you much bigger moves, but NASDAQ will give me and all of us much more chop and many more expenses. So on the screens, when I started on the screens, I was suffering for money. I had just gone broke. I had no confidence. So I wanted to keep my expenses to a minimum. That became more important to me than having bigger moves. And then I learned how to increase my size, so I made more money in the S&P, and I stayed away from the NASDAQ.
There we are.
Breaking shit. Okay, here. All right, so we took out the low and then pounced. This is not worth trading. We went 74.75 offer, broke to 74, and then bounced 2 points in your face. So if you sold them, you took a stinger in the mug. Who wants to do that? And not worth trading. This is not worth my money. So now I wanted to see how the algorithms were taking the market before they were going to extend the range. And the ATR at that point this is in 2013, the ATR was like 15 points. So in the S&P. So the algos were taking it to 4 points and then either extending to 15 or 4 points and then coming back to the opening range. Does that make sense? Yep. So I started to trade 2 lots, and I would sell one at what I started to call the pay line, and then I would sell one at 15 points. And then the market started to rally from there, and I would buy, extend the ranges or, the swings. So I would buy 3, pay for 1 at the pay line, take 1 off at 15 points, and I'd have a runner.
And then there goes 79.75.
Okay, and then I would start to do it 16 lots and 18 lots. All right, now go point my favorite, and I'll put in a scratch stop. Best trades always come from the opening range. All right, there, can't lose money. See, here we go. 83.75 pain line. Let's see. The market tried to rally. It did. Came back down to the opening range, tried to break. So now the algorithms are going to try to extend the market up to that 15 handle rotation. So let's see what it does. Markets do the same shit all the time. Back down, stopped out, no harm, no foul. I can always put the trade back on, cannot get back lost money. I can always put the trade back on, but I cannot get back lost money. This is why I don't like pullbacks. I'd rather buy them as markets coming back up through it. There, like that, okay? Now, bid them. Oh, fuck. I had the edge and I gave it up. That's all another thing. Edge is not a mathematical equation. Edge is buying the bid and or buying the offer and having it go bid and having the ability to scratch the trade. Because a scratch, write this on your foreheads. A scratch is as good as a winner. I don't like using the term winning and losing, but a scratch is as good as a profitable trade. It's the same thing. No volume, no movement. I'm only doing, if I wasn't with you guys, I would not be trading.
219,000 contracts only so far.
Yeah, nothing.
Yeah.
If I wasn't in here with you guys, I wouldn't be involved in the markets whatsoever. Somebody had asked what the pay lines in gold is. $2. What I use to remove my risk in gold is $2. Actually, with the ATR so expanded in gold, I also try to take like $8 out of it. But
Look at this. Now we go.
Oh shit, we're rallying again. Okay, I can always buy these. I don't want to. Don't chop yourself up at the pay line. This market's not going anywhere. NASDAQ opening range. What is that? Let's see. NASDAQ opening range is 721. So the NASDAQ is barely above it. The S&P is barely above it. Not worth the money. Not worth the expenditure. I think volume is waiting. Yeah, Ramirez. I think Remo. I think the volume is waiting, and price movement is waiting for today is waiting for the possibility of the Supreme Court decision on tariffs. Now, whether it comes today or closer to Christmas, who knows? It's anybody's guess, but it can come at any time.
Yeah, I mean, what news comes in? I mean, I have my mobile app. If I'm at the Apple Store, man, I'm getting involved. I mean, it's a news situation.
Pay line in crude is 20 cents. So when I'm trading crude, I'm going to pay for my trade with 20 cents. Okay. I can buy the pay line if I want to, but I don't want to, this market is non-committal. All right, now listen, for those yous, okay, now here's something, okay? For those yous who are trading funding company money, if you're long 79.75s, take the money at 4 points. On a day like today, we're not going anywhere. Pay for your trade, remove your risk, take profit, call it a day, call it a trade. 4 points is better than a sharp stick in the eye. If you're, a more experienced trader like me, and you're waiting for volume, and I don't trade volume, but you're waiting for price action and price movement, then stay out of the market. It's not worth your dough.
Yeah, I mean, 4 points. One contract. That's 200 bananas. That's not bad.
No, it's not. Leon, I don't think the market cares about PCE. These are the PCE numbers are from September. I don't think the market really cares about them. That doesn't mean that we don't. I mean, they can come out wacky and indicate something that I don't see, and we can move. But I don't think the market cares about them.
I agree, and I think Tracy would too. It would need to, and she said that this morning. It would have to be an extremely crazy number.
Mm-hmm. Yeah. And it'd have to be something, and again, why crazier things. Do you remember when the repo number would come out at 10:40 Central Time, and that was something that we would do?
Yeah,
that was something that would move us. So like when I started on the trading floor, Chicago Mercantile Exchange, I didn't know anybody. There was like the Irish contingent from the South Side that they all took care of each other. Then there were the Italians, and they took care of each other, and the Jews, they took care of each other. I didn't know anybody. So I had to differentiate myself in order to earn my shot at trading. And I knew that I was good at it. I knew that I was better at it than most. And so I worked my ass off. If my mother had breast cancer surgery, I was at work. And the guy that I worked for said, "Why are you here?" Well, I'm not a surgeon. I can't help my mother. I can help my mother by coming here and doing my job.
Yeah.
I had my wisdom teeth were removed. I was at work that afternoon. They sent me home because my breath smelled so bad from the cut. But I was there, I mean, I had to earn my shot. And one of the things that I wanted to kind of mention today, and this is for all of you, especially those of you that are still trying to find your footing. I walked onto that trading floor like my uncle taught me. I walked onto that trading floor like God sent me. And every day I walked into the pit as a clerk, no matter how nervous I was, no matter what the butterflies in my stomach were, earning my shot. And as a trader, the same way, on the floor, off the floor, on the screens, I walked into every situation like God sent me.
Yeah.
You
Well,
know, you
it's
need to do that too. All of you need to do that.
yeah.
Be confident.
Yeah.
Come to trading like God sent you, because he did. Otherwise, you wouldn't be here. It's no accident. And there are no accidents in God's world. He's got a plan for you. Find it.
And you could be confident and humble at the same time, right?
Oh, there's a big difference. Yeah, confidence has nothing to do with ego.
Yeah.
I mean, ego. You want to read ego? You want to see ego? Go to Twitter and read all those schmucks. You'll see ego. And
Hey, are
those
we going to hit
people have
another
opinions.
rotation level here?
Yeah, well, we haven't hit one yet. I'll buy 93s if we get there.
Okay.
This opening range has been the 79 75s have been manageable, not easy, but manageable. Anything else, anywhere else has been a little bit difficult. So I would rather wait when the algorithms have clarity. When the algos know exactly where they're going, then I'll take that trade. And that means 93, 95, the algos are going to either stop at that 50-nano rotation, come back to the opening range, or they're going to expand, in which case I've got some clarity as to what the market is doing. If I've got clarity as to what the market is doing, I can go ahead and spend some money in it. But I'm not just going to keep banging around, the opening range in a market that I don't think is going to go anywhere. It's not worth the expense. Does that make sense?
Yeah.
I know it makes sense to you. Does it make sense to the chat? All right, okay. I know takeaway use. I got to stop saying that, don't I? My mother would tell me that when I was a kid, don't say use. And then I would, and I still do. So when people make fun of me for saying it, I always hear my mom saying it. What's wrong with you?
Hey, Pax.
Hey, Jimmy.
I'm gonna be right back. I just gotta step away for 1 second.
All right. Anybody happen to see that Sebastian Maniscalco latest clip where he talks about anybody wake up refreshed anymore? I wake up and I feel terrible. That made me laugh. And then he talks about how when you get a little older, you got to pee all the time in the middle of the night, and it goes in all kinds of different directions. He said, I mist. That's where I think Jimmy's going. Going to piss mist. Oh, Maron, this has got nothing going on here. Nothing going on, Madonna me. We went last night. See, all right, now, just like in a pit. If I was in a pit, I'd be, standing here watching the market go to 93. I got nothing on. I'm thinking, all right, fuck it. I'll buy a 100 lot at 93. And then I'd start talking about what I had for dinner. My wife and I, our youngest daughter, went to this I don't know if it's Palestinian, but we went to this Arab restaurant in a little Palestine. It was out of this world. My favorite joint to eat at around here.
Joint.
Joint. You got to say it like that. You can't say joint. You have to say joint, like there's an R in it.
You were mentioning the groups in the pit. In the bond pit back in the day, there was the Oak Park River Forest contingent.
Huh.
And that was, it was a mix of nationalities, of course, but those are the we all went in together, we all left together, we all ate breakfast together.
Yeah. Eventually there was, I fell into a group like that on the south side, and we drove in together, we got coffee together, we ate together, we fought together, we drank together.
Yeah. Yeah. And when things weren't going well and there was nothing left to do, it's like, all right, it's 10:30, let's go to the snuggery and play pinball and have a beer.
Yeah. There was, I think I started to say this and I got off, I went in a different direction earlier. There was regarding, health issues and shit. I remember sitting around a the Merck Club, which was a private club that we belonged to. Just like in Trading Places, those old private clubs with wood paneling and shit. It was just like that. Sitting around talking to a couple of partners and friends of mine, and we in that conversation we were talking about how we were all willing to ruin our health in the pursuit of, or neglect our health in the pursuit of our fortunes. There was me, Bobby C. I don't want to say their names. Bobby C, Danny S, and Sammy A. Two Italian guys and then two Irish guys. Three, and Anthony Ponarelli.
Oh, that's a good mix right there.
Yeah. Three of those guys are dead. And the other one is broke. I'm the only one standing. Three of them are dead.
Yeah, Anne Ray worked for me for a while. Anne Ray Ponarelli worked for me for a few years. She was awesome. She
is. My wife and Anne Ray are very good friends still.
Oh, really? Wow.
Mm-hmm. They clerk together on the floor. But so three of them are dead. Cancer, drug addiction. Two cancer and drug addiction. But that lifestyle, this lifestyle that we have, if you're neglecting your physical health in order to make a bunch of money, you're going to experience, God forbid, so make sure you take care of yourselves, because this is not easy. There's nothing easy about there's nothing easy building your business. Once you build your business, then it should feel like you're cheating life all the time. But the point is, my brothers and sisters, is don't neglect your physical health. I'm the last man standing in this business, out of those guys. Three of them are dead. The other one is, he's got a produce business. He's successful in that, but he, went broke first from trading. And I've got health issues, but I maintain, I plan on living to be 120. I'm middle-aged, which means I'll live to be 116.
You better.
114. So
you better. I'm going to kill you.
Elon Musk. Thank you. Elon Musk will see to that, right? I mean, by the time we make to 85, we'll be living to be 120.
Yeah, could be.
So, but I need to maintain my health. We all need to maintain our health. Please don't neglect that.
Yeah. On a non-health related note, Hars, what's my favorite beer? Melfi's Gin.
Oh, yeah.
My beer days are behind me.
Yeah, me too. No mas gin. No mas gin, no mas beer. I haven't had a beer in I don't know how long. I couldn't tell you.
All right, so Pax, we have a few minutes left. Let's think about the future for the day here. What are you seeing in the tape right now?
Nothing. We cannot make the S&P cannot make its first rotation up to 93. And so I don't think we're going to do much. Look, this isn't bearish price action. Traders that like to, like I said, we were talking about earlier, traders that like to go to back and forth, on shorter term time frames. You can find an entry here. Let me put up a 5-minute. Oh my gosh. I have to get on with Burke. You can find an entry on a 5-minute, 1 minute, 2 minute. I don't trade like that. I never have. But that's what this market is giving you. You can sell, I don't do this, and I don't know anybody that makes money long term doing it, but you can sell 89s by 87, sell 87s by 85s. You can do that all day. I don't do that shit. I see it happening, but I'm not going to do it. We cannot get above 93, 95, then we won't extend the range. That's it. If we cannot achieve 93, eventually we'll come back to the opening range and we'll settle in the opening range, and the market will be non-committal and do nothing. Friday, capital preservation. Keep the money you made this week. And if you didn't make money this week, don't try to make your money back today. Please don't do that. Don't chase your money. You'll get destroyed doing that. If you had a good week, capital preservation Friday. If you had a decent week, take that money out of your trading account. Maintain your proper, don't size up just because you made money. Ego, that's ego trading. Size up because it's a good business decision, taking in all kinds of different factors. If you struggled this week, if you're down dull, if you spent more than what you made, do not try to make it back today. No. We're not going anywhere. We're not doing anything. Don't try to scalp some money back. You will only make it worse, at least in the long run. Maybe today you get away with something, but that sets you up for disaster. It's a passport to poverty, a recipe for disaster. You want to make sure that you're here for the long run. So if you spent some money this week, Slow down. Take it easy. Next week is going to be busy. We're going to have really good price action with the Fed. Last December, Fed Day was my best trading day of 2024, and that was saying something because I had a very good year last year.
Yeah.
We broke 245 points from the time that Powell started speaking in the press conference to the close. 245 points in the S&P, allow 1,000 points in the stance. I don't think we're going to have that kind of price action but we could. Who knows?
Pax,
So
we got a couple young studs just joined us, XYZ and Christian.
What's up, fellas?
Hey Pax, hey Jim.
Good morning. Good morning. I like how Jim says, or else I'll kill you, and you just say thank you.
Well, that means thank you, because that means that we're both still going.
Right.
So I appreciate the optimism there.
That's funny.
I'm inspired, man. And Christian also inspires me. Oh, so does XYZ. You should see this guy in person. He's like, you can't see how buff this kid is.
Oh, and handsome. Both handsome lads.
And then Christian looks like just like a professional athlete. And it's crazy.
Chris and I worked out together. Chris, when we both got there, Chris and I worked out together in Naples. Yeah. Love that kid. Love XY. I say this all the time, and I cannot stress the importance of it. The numbers out. I cannot be prouder and more humbled to be part of Ninja Trader Live with all of you and the next generation of traders. And yeah. I mean, I'm grateful to not just be here and participate in all of this with you and get to know all of you, but to have an influence in your lives and careers, because this is a long term. This is a marathon. It's not a sprint.
So this is a great segue for me, Pax, to say we really appreciate your subscriptions. If you could subscribe to the channel, we greatly appreciate that. You don't get commercials. You get some great content. You get some great trading. We're open books here. We're laying on the line, trying to answer all the questions we can, trying to kind of give you some combined many years worth of experience. So those subscriptions are super, super cool. Like to get some more of them, but if you have subscribed, thank you for subscribing. If you haven't, we'd appreciate it if you would. It's a simple click of the mouse. It doesn't cost any money.
Simple click of the mouse.
Free.
You said that like you just stepped off the North Avenue bus too. Simple click of the mouse.
North Avenue bus. I used to take the Irving Park bus down to Wrigley Field and clean up the stands for a free ticket.
Yeah, that's how you got in for free, right?
Yeah. It's back in the day. XY's like, what? XY does the opposite. He just tips everybody.
Life's easier when you tip people.
It is so, you know what? XY, somebody in my group the other day, one of my best friends was talking about how he likes going to restaurants with me because they hug me when I walk in. Everybody likes when I come in. I tip exceedingly well.
You haven't been hugged till you get hugged by Pax.
Oh, thank you, Jimmy.
That's what you want. Anyway.
Actually, no, that is true. That is not embellishment. I can confirm that.
Thank you, man.
But yeah, I think life is just so much easier. Obviously, if it's within your means. When you tip, it opens up everything for you. It opens up the experience for you. So, and you're eating out, my examples will always go back to, say, Vegas, right? When you're in Vegas, you've got dealers, you've got cocktail waitresses, you've got hosts, you've got even front desk staff. You tip people, you treat them well, you be nice to them, and it always comes back.
Yeah. A two-way one for the dealer.
Two-way hard ways, everything.
Yeah, for sure.
Always get the dealer on the action. I always ask, would you prefer to play it or would you take it? They always want to play it. So they're in the action. It could be any game. It's always
Hey, real quick, I just got long 93s and 95s. So I've doubled up a little bit here, and there's no risk on them. So I am going to take profit now on these at 08, 69.08. And then above 08, I will add more, and we go 10 bid, I will add more there.
09 half November highs, remember.
Oh, that's true too. So the second rotation takes us up to November highs. Oh, that's a great point. So big resistance big resistance up there. We go through it, and we can see 69. We can see 69.53, the all-time high by next week. 69.80 by next week. Easy P. That was so the just I want to make this point and then I'll get out of your hair, you guys. Is that once we got above, this is why I waited from 79 to 94. It wasn't worth my money. Once we got to 93, 95 above that rotation, then the algorithms know that they're going to try to push for another 15 points. Then it's worth my money. Okay. So I'm going to increase my size without increasing my risk. So you buy 93s, we go 95 bid, you buy more at 95. Now you got a double unit on. All you have to do is pay for it, manage it, and take your profit on it.
Awesome, man. Thank you, Pax. Hey, before you hang tight 1 second, Pax, let's just really quickly, XYZ, what are you thinking about today's action so far?
The action,
Yeah.
I'll go over it with the chat, but today has rewarded me with 2 A+ setups, and I have capitalized on them, and I'm very happy about
Order
it.
rejected.
All right, all
I
right.
haven't had a day like this in a long time,
All right,
where
I'm
the
making
market just
reservations.
came
Order
to me
filled.
I'm
instead
making
of me
reservations
having
for
to
the
chase
Prime
it.
Steakhouse for me and you.
Oh, for
For all
sure.
of us.
Yeah,
After
there we go.
today,
There we go for all of us. Christian,
after
how about you?
today,
What are you
for
thinking this
sure.
morning?
I think the spies are really close to all-time highs. So I think we're moving to that area. In ES, I didn't even check what for ES is. Still a bit away, but
Yeah.
we
66.53, Chris.
we had this 5-day
69.
consolidation, and this is like the breakout of that. So as long as this larger daily breakout holds at 68.60s, 68.50, 68.60s, we're gonna go to. I think Pax, you said that upward target, right? I can't remember the.
69.80.
Yeah. I think we push up to that area.
Yes, sir.
Awesome. All right, all right. Well, listen, Pax, thank you for spending this morning with me. Love you, brother. You have a great weekend. I'm gonna drop into the chat. Also, I'll be back at the end of this trading session here to say bye to Christian and XYZ. So in the meantime, everybody, thank you for the subscriptions. Thank you for being here. Pax, let's let these young guys do their thing.
Yeah, get after it, boys. I'll see you next week. Have a great week, everybody. God bless you all. Nobody fights alone. Be your brother and sister's keeper. Otherwise, you're missing out on life.
See
Take
you
care,
guys.
Pax. Have a good weekend.
I thought he was gonna say, otherwise I'll come and slap you or something like that.
Mhm.
Yeah, I think, well, I'm 150% not taking any more trades. So apologies, chat. The market really presented me with two perfect opportunities. And it's not because they worked, because they are A+ to me. They just happened to work. But I say it's perfect regardless of whether it would have worked. Um, I guess just I'll get this out of the way first, and you guys can watch Chris do his thing, execute. But for NQ, we've been largely stuck in that range, and pre-market, this profile was closer to P shape with a taper down here. So I can see already that they've tested this spot. This to me is like the gateway right back into this low volume area where it could really poke down. So you can see yesterday when they did trade under this, they did test this spot again. They're always going to poke
Order
through this
filled.
low volume area and test that prior hold. And this time it didn't. Not only did it not, it tapered. So if you look at the volume, so I'm going to just delete this off for now. If you look at the aggregate of this balance in the volume, it's this range. What has this profile done? It's poked back down, but it's tapered. Where the market used to be very happy to trade for 3 whole days, right? Now it's no longer willing to trade these prices. These prices are now considered the downside in the market. If these prices are considered the downside in the market and we're building higher, this is to me what precedes an actual break. So my speculation is today is going to be that move up and through. Like Chris said, he's looking for the highs, right? The all-time highs, which is around this spot, right? This is the volume. 1, 2, 3, 4, 5 days almost of just straight overlapping. So we have room to go, but my idea was, okay, this is likely going to be a break. I want to hold my size as long as possible. Obviously, one of my lots was trailed out on that news just barely. So what? But I had two trades. One is outlined in my playbook as an A plus. So on this move up in the morning, right off the open, very imbalanced, straight shot up. If anyone uses a footprint, there's a lot of imbalanced ranges in there, and I'm always looking to see if it retraces. You can't just play a retracement just because it exists. The imbalance means it's an aggressive market. It means, in this occasion, there's no offer that's willing to step in the way of these prices. If that's the idea, it's like, why would you offer it then? So for me, it tends to retrace, but it only does so when it fails to get higher. So it's the first time back into this red zone right here. Other pre-existing volume that led to a big downside move. This was an old trap. So you couple that, and I'm looking at it, and I see an imbalance, and I see that we're 100 points away from the 9 EMA. So there are three inputs that are telling me, okay, we can possibly nab a really strong short if and when they stop getting continuation. And you can see they had two attempts. On that second attempt, they poked outside just higher. So the taper wasn't that great, which is keeping me off the shorts. I wanted to see an attempt short and then back up and then a lack of interest long side. And they put it right here. As soon as they poked out, still taper, no volume. To me, that's like, all right, it's ready to pull back. It's going to do so now. And we take it all the way to VWAP. Heavy-handed. I've been heavy-handed today. So we go to VWAP. I'm flat. I'm looking at it because why? I want to bid VWAP. Why do I want to bid VWAP? Because we're building volume higher, not lower, right? So my entry here, you can see it's before the taper. It's before the market has considered the downside prices to be not as interesting. So for me, I've got a lot of, we'll say, house money on the day, and I can be heavy-handed on this trade as well in what I would consider a perfect storm scenario, because if it gives me access at VWAP and I'm going to be in line for a new high, which I wasn't convinced it was a new high because there was no real taper, right? It's like a poor high, whatever you want to call it. It was a heavy node that didn't really see, I would say, resolution where you can look at an end of day profile and be like, yeah, this is how it resolves. It didn't look that way. So perfect storm again. I have an upside that to me has not been completed. I have a perfect spot to get in, and I have a perfect market environment, which is continuation higher with the build. So get really heavy-handed on the longs, and I'm not peeling anything off until we're like 80 points higher at the highs. Down to 3. You guys saw me trail one of the 3, and I got poked out here. We were down to 2, took another one at a new high, and I'm going to sit in this one. I'm just literally going to let it play. See if we can get to this range here. 920s. I'm not even going to trail it because this is now inconsequential to me. If it comes back, I won't even feel bad about it. And I want to note gold. I wanted to get long gold, but I didn't because I was just playing really heavy-handed NQ, and it was giving perfect opportunities for me. So we do have, the move down here, and now again, they have this volume that is not happy back into the bottom ranges, but now they're starting to build above again, and they're trading higher. So now I'm looking at this range. This to me is a hold that could potentially break price out. And I'm looking at this candle right here. So let me remove all these. Let me just get all this stuff out of the way. So I'm looking at this candle. If this candle can get a continuation off of around like the midpoint, which is pretty damn close, this market can break towards this spot. So it's like the 280s, can nab somewhere around the 260s, 4260s, try to drive it into the 276s, 280s. It worked pretty well. I mean, this is a pretty good move, 15 points so far. But it's the same idea in gold as I'm seeing it in Q. Where is volume going and where is it not? Today, it's very clearly not going downside. And it was a key decision spot for me. So as the market came here, it made this choice. It leads me to the next choice. Well, if they're not going to do this, I think they're going to start doing this if they're still building. So luckily, in the morning, Globex has already shown the build is higher. It's not lower. It's already giving me that bias to be on the right side. And we're capitalizing. So those are my trades. Thank you for coming to my TED Talk. I really hope people don't come in and ask about that later because it's long-winded. I just want to get that out of the way. Hopefully
Why
you
don't
guys
go
got value out of it.
review this part of the video?
That's true. Yeah, I'll tell them that. That's a good idea. Yeah, refer to the I know nothing. Yes. Always refer to the playbook. If you got questions, just go there. It's literally in there as an A plus setup. Two of them actually. Yes, I forgot about the rewind. Thanks, chat. Thanks, Chris. So you're bullish on the day too, right?
Yeah, I think SPY's going to all-time high. So, I mean, I'm in a buy pullback mode in for the rest of the year.
Isn't there a clip of Jim saying Santa's coming?
Santa's coming this year.
Yeah. They've got it all.
Yeah, this market's on fire. I mean, I don't get why people would short. I just have all these stocks breaking out, and the market's a market of stocks, and they're all pushing out higher. Like I don't.
Yeah, they're clearing all my red zones is just where supply was located, and you're getting it cleared. The market's clearing all supply that held and pushed price. That's very key information, not to be ignored.
Wow. Yeah, these stocks
You
are
need
on
to wrap your
fire.
daughter's gifts? Yeah. Yeah. Yeah, Rico. How do you say your name? Rico SLA. The playbook is your Christmas gift, chat. So he's right. Just consider it your Christmas gift.
Let's see if we can get a pullback so I can buy. SPY is $1 away from, let's see, $1.50 from all-time highs. So I'm buying all pullbacks until we get there. I mean, really, for the rest of the year.
You're swinging like stocks too, right?
Yeah, I mean that's my main thing. Just because accounts are much bigger.
It's like I created Microsoft and gave it for free. That's a compliment for sure.
We do have prior month's high coming up here at 69.09 in ES, which might want to tag it here soon. So let's see how we can consolidate, pull back, and then I'll be looking to buy the pullback today.
Fiber optic, thank you for bringing that up, by the way. 140s. I told you guys, generational. Your grandkids are going to ask you about them. No one else had the opportunity. Nick bought the last remaining lot in the 140s.
What was priced at 140s? Are you talking about gold?
No, NQ. There was a stream with Nick, me, and Salma, and he longed the 140s, and I was like, This is a price no one will ever see again. Never, ever. I don't even remember what it was. Fiber optic. What was the actual? It was like 25 140s or something. Yeah, what was it? I just keep saying 140s, so if I was wrong, that I could just lie and say I didn't mean those 140s. What day was it even? 25 140s? Yeah. Oh yeah. It's looking generational.
Bren, I don't use VIX. for futures. I use it just as a reference point to maybe size differently. Like in a low VIX, like 16 and under, we know that it's going to be choppy. It's going to be a choppy low volume uptrend, which we've seen this week. There's going to be maybe one or two sell-offs attempt on a daily basis and then recovers. That's just from what I've noticed, but I don't use it as far as like key pivots or levels to trade against. If VIX is down, then you can size higher. If VIX is up, if VIX is at 30, you're trading with 2 micros.
I know nothing. Have a good weekend, man. Thanks for hanging out. Please hit the likes before you leave.
853. I have a level at 860s here, a zone. You can see it. NQ's rejecting from it right now. So what I'm looking for here is, since we're ending this 9 EMA uptrend on the 2 minute, can we now move back into the 20 EMA and then create a 50 EMA wedge? That'll create a nice consolidation. And then if we are to go higher from here, we can push out higher.
You have a zone from 850 to 878, it looks like. So yeah. The thing is though, this entire up range today is breaking through every zone that I have. So to me, it's best not to assume that this is the one that holds when it's just building above every. Look at these are red zones. I should change this by now. This is different, or this has been dealt with and reclaimed on the upside. But yeah, price, these zones for me, it's the same thing as like supply because I mark them off of volume like this. So you can see the first level is this volume, the second one was this. It's volume that built and held and led to a huge push. So that's why these three zones are really close together. It's just because, well, the market provided the volume clusters close together. But this one got bought through. Supply moved out of the way. This one moved out of the way. This one, I'm thinking it's going to be moved out of the way. How or when, I don't know. How deep is the pullback going to be? I don't know. I mean, the 9 is like really sloped. The 9 is sitting at 806 for me, so probably at the 800s is as deep as it goes because it's super aggressive on the bid side today. But yeah, these are just supply zones, and this is the supply itself. It's in the volume, and I think they're gonna get every time they come to these zones for the first time, they have, offered, right? Because it's the first time back in a while. But what happens eventually? They find a bid that's still supportive in the market, and they come back up to fill it through. So here's the low time frame example. First time back, got the offer. Came back, bid stepped up to hold price. First time back, got the offer. What happens? Bid steps up to hold the price. So it's likely going to continue. Obviously we are due for a deep pullback, but it can stay that way for a large majority of the day. It's just if the market really wants to buy it and it's climbing higher, they have no chance, or no, they have no choice but to have to buy it higher. So yeah, that's that. That's why Chris is like super bullish too.
Oh,
This is breaking the tape. Yeah, I'm looking through chat now. Sorry, I'm barely looking at it. I appreciate you guys. Yeah, I appreciate you guys. Yeah, if anyone asks, just tell them to rewind the stream on my behalf. Do wicks on the candles help confirm tape? Um, to me, it is something I look at, but it's more of I don't see it as like the tape. I see it as just, it's a lack of time spent. So because I don't have a TPO, a true TPO, I'm using candles instead of like the letter blocks. To me, it shows it can be excess, but more importantly, it is a lack of interest by time. So, yeah, if you get a bunch of like downside wicks, usually that's going to also mean, well, there's a taper in volume because they can't really spend enough time at these prices. So, like TPO would have it. And that would, encourage me to either not get short or look for longs or use it as a place to try to get a position. So yeah, use wicks, but not in like a way of seeing it as a tape, you know. But like a TPO, yeah. I have a 40-inch 5K Rico. I went with the 40 instead of like a crazy 49 because when you trade NQ, you need taller monitors, not wider for the DOM. I mean, if anyone's seen an NQ DOM, taller is more important than wider for sure. You want to be able to see everything without having to reposition price all the time. Yep, glad I can answer it. How do you
What's your
find your playbook?
target? 927.
927 is where I'm happy to take it off, but it's not where I think the market stops. It's just I have one left, and that's where I'm happy to book it and just call it good. The playbook, you can just go to my Twitter, XYZ Trades, and it's right in the bio. Otherwise, if you're willing to type it out, paintingthetape.net and go to playbooks and you'll find mine.
If we can get consolidation, but it looks, I mean, it's very strong. And what if the price move would go make a new high with very little consolidation? We have ES has first support at 68.93, so I'll be looking to see if that can hold for a uh, reversal off that. And Q doesn't have one until 5. Actually, there's something here at 790. It's a 5-minute zone. Don't have it plotted, but actually, why is it not plotted? So we'll see if we can get a little bit of a pullback in there.
Morning, Kane. How did I determine when you were right to scale position sizing? Mathematical or subjective? It's both. Mathematical as in like, look, how much money am I really
Oh,
willing to
7 on the
risk?
5-minute zone.
And how good the setup is. Today I was super heavy-handed in these trades because they are A plus trades for me. So it's pretty much what makes your book. It's what makes your month, these kinds of trades. So yeah. Heavy-handed. The first trade because it's A plus. The second one because I had a lot of gains. I can protect my P&L on the day still because of what the first trade paid me. So I was willing to go super heavy-handed on the second one as well. And it was off of VWAP. Come on. If we're bullish and we think it's gonna just break out, what better place than VWAP to start putting in your size, right? So, and the data worked out in my favor. So it's just perfect storm today. Doesn't always play out like this. I mean, you can see in the other streams, I'll have, my size on, I'll cut like half, maybe even less than half, and the rest will just come back to me. Some days it works, some days it doesn't.
All right, we're getting that pullback. Let's see how we do into the 9MA here on the 5-minute.
What made it an A plus trade today? Rewind it to the beginning of the stream.
Yeah,
I think I spoke nonstop for like 20 minutes.
There should just be a banner there saying,
Yeah.
go back to the beginning.
Give him like the exact timestamp and everything. It was way too long. I cannot repeat it. Chat can confirm it. I cannot repeat everything. It's like 20 minutes of a rant. So just rewind it if you really are interested in why. If not, sit back and enjoy the show. Chris is gonna make some money. I brain dumped. Yeah, I word vomited. I brain dumped just everything the trade gave to me in my head. I spat it back out.
He doesn't even remember. He blacked out.
I was unconscious.
Stream of consciousness just
This VWAP demon took over
was
me.
delivered.
Good morning,
Hey,
Shab.
Shab.
Shab told me we're her favorite duo. I may or may not be lying, but thanks, yacht.
Moving
Do
into
I
the
long
9 MA
please?
here. Let's see what
Label.
we do.
Yeah, we're getting close. 8:12 it looks like is for me, the 5 minute.
But you have the EMA, huh?
Oh yeah, I use EMA. Are you looking at a 9
I have
SMA on a
SMA.
5 right now?
Yeah.
So it's at what on a 5?
818, 819.
819, so it's like 7 points higher. I do also notice on really strong trend days, the 9 does not get touched. My 9, so the EMA does not get touched. It's always going to go towards it, hover above it, never really tap it, and just continue onwards.
Yeah. Yes, just hit the 9 MA.
Would I add to the trade? No. I gotta take the money I've made and just like screw off. Don't want to give any of it. I mean, yeah, I don't want to give anything back.
Yeah, he's done for the day.
I am done for the day. It's the easiest day I've had in a long time, only because the market came to me it just felt like it just came to me willingly instead of me having to just consider a million things, wait for a million things and stuff like that. So you gotta take it for how it is.
Qs are very close to a gap close as well. I just saw that. Not NQ. Well, NQ RTH. I'm looking at Qs. So we can get a push here. That could be, a bit of an aggressive entry for me here, but this is not enough of a structure for me. But it would be like something like this, get long here, look for new highs. But it's a very, very, very micro structure. But it can work on a day like today as we creep to new all-time highs. Ideally, this becomes a longer consolidation, but I don't know if we'll get that due to the strength we're seeing. Just markets firing on all cylinders.
McNasty, it's well above. I'm happy to report that it is well above. Certainly an outlier, man.
Yeah, it looks like it's going to go, at least ES is acting a little bit stronger now than NQ. But there you have it. You have a very fast touch of this 20 EMA cloud and then bounce. So I went in a little bit deeper. Like I shared, due to the type of day that we're seeing, this is the type of action. We're now pushing up to new highs. So if you took an aggressive reversal here, like this would be my setup, but I just didn't.
Production, thank you. I hope you have it copied so you can just paste it. But I appreciate that.
Nice.
You used to say your stops were around $1,000. How much room am I allowing? With volatility, I don't adjust really the dollar risk. I just adjust the size, so it's going to be lower. So it always depends how good is the entry because of where I need to risk. How much do I need to risk? It will size accordingly. Today on the trades, I was giving a bit over 2K. I would say like 2.2, 2.2 on them after like getting the full size in. So I'm slowly scaling in the size. I'm not firing off. When the volatility is like this, I can't go all in full clip, right? I can't manage it as tight as I could that way. So it's going to be a process of layering in, and as the order flow proves, okay, this is still the information. I'm like, okay, good. And then, things progress, things develop, and I will put more on, or I'll look to scratch it out, or I'll look to just hold off on it, maybe take some off. It's changing by the second for me when I'm trying to position. And you guys will see that on all the streams. When it's slow, like it was, I can go full clip in, right? But it's just dependent on the opportunity. Um, do I
And
use
Kane's ready to short this.
Kane? I be looking fail. I hope not, man. But if we do fail here, it'll be a deeper pullback. So I'm gonna trail this up here and lock in whatever this is. Lock in 2600. What's that like? 130 points. But yeah, I don't know what the footprint to spot divergences. Bid and ask. I think the only way to do like bid ask divergence is like cumulative delta, right? But I don't use cumulative delta. My footprint is kind of like this, having this in 5 minute time frames and to spot where it's building, where it's not building, right? And if there are imbalances in a move, if a move is really drastic like the open and there's a lot of like just we'll say holes in it, they tend to retrace. So preliminarily, they give me like kind of like a first input, like, okay, well, maybe I can look to trade back into those ranges, or I stay hands off
Order
until they
rejected.
retrace into those ranges to look for continuation.
Order
So
filled.
that's my footprint use case. I don't do like divergences. I don't trade divergences really. The closest thing to a divergence for me is would be like a trap, right? So on all of these pullbacks, they're definitely trying to sell us, right? And if they put in a lot of negative delta and we start trading above it, and I see a bid on the DOM start to step above that price, start to load above that price, to me, that's okay. Now we can get long, risking the sellers. So it's not divergence, but it's the closest thing to divergence that I do. But I don't really do divergence. I actually hate it. I hate when ES and NQ are diverging because it's more confusing. Like, who's the liar, right? It takes time to find out who's the liar, and a lot of damage can be done in the meantime. Friendly fire today.
Good luck.
Good luck, Kane. Well, I hope for your long I get cooked. I've already been paid on the long, Kane. You can have the rest. I've trailed this up already. I'm happy with this. We can both win, man. We can both win. It's Friday.
We're consolidating here. 2 minute has a wedge now. ES is leading. Cyclicals are stronger. Yeah, you have industrials and banks that are a little bit stronger than tech.
Yeah, Kane, I had 8 on from down here, and I scaled nothing until new like the highs, which is like 80 points higher. So you can have the rest of it, brother. And you can use that money to buy me something nice. What's your entry, Kane? Actually, I mean you're up here. It's still up here, so you got a pretty secure entry. I mean, if they can, I think they trade above or they trade below like 817s, this thing can probably move down like another 50 points. pull back another 50 or so. 50 and a half. Dude, you're at the highs high. You are well protected.
Probably at 1R now.
Kane's got the IB. He's got anchored VWAP. We're slowly turning him.
Yeah, and SMT up there. I see it. All right, so if we pull back, I'm gonna be looking at this 43 area in ES and then see if NQ can go back down.
Good luck, Kane. Hey, for what it's worth, I hope you get it. I wouldn't be mad about getting tagged out here and just being done with this. Look at gold, guys. This is a long I really wanted to be involved in. Perfect storm too, but NQ had my attention today for sure.
I'm long gold, but in a
You long
swing.
gold?
In a
Hell yeah,
swing.
man. What price?
I'm in stocks in ETF.
Hmm. Yeah, this gold, really nice volume build, held the prior build perfect halfway through that bullish engulfing candle, and we're rocket ship. Also, spent some time in my TED talk earlier about gold, so you guys can check that out if you haven't. Why do I say 817s? Just volume. If you look at this build, they're currently trying to figure out their feelings up here, right? The 860s down to the 830s, and then it starts to get thin. To me, the 830s down to the 8 like 19-ish, this could still find a taper. It can still show you a taper if they trade this. But if they go under that, which means 17s, that's a little too steep. They're likely going to flush it, or they'll probably try to trade back into the 30s. And if they can't trade the 30s anymore, 40s, it's probably going to flush. So I see a good 50-point runway just for like a TP1. Um, because ultimately, if they do give you a 50-point runway, that's a lot of volume that's now set off sides. And it's still, look, even though they're breaking zones all day, um, this is still pretty heavy supply right here. It's 2 days of volume right here, overlapping. And what's right above it? Super thin. This is very aggressive. So these participants, I would say very aggressive, not because it's 2 days of the same build and hold, but just above this price when they slammed it down, not a bid to be found and not a chance to even bid this. This is very aggressive structure to me right here. So to access this, it's going to take a lot. It's going to imply a lot. And this is the first time getting back into this old supply. So yeah, lots to consider. I'm happy that I got out with what I've got already before, while the market was making the earlier decisions, I got to be involved in those. And I don't have to be involved in these next decisions because it could get dicey. I mean, Kane's short. I do hate longs if, Kane is short.
Yeah, good. I'm seeing that level, the 850s to 870s,
Yeah, 860s, 870s.
860s. Yeah, I see that.
Lots of supply up there. And, they bumped their head
Order
about three
filled.
times just now. So the market's gonna make that choice.
Order
And now the next
rejected.
choice is, all right, at what point do we find a supportive bid again? So now they're gonna go
Order
down till they
filled.
find supportive bid. We don't have a build of volume until the 770s right now. So just to gauge, all right, if they can breach 17s, it means it's going to be a lower volume spot. And at that point, it can slide right through, or a new bid can step in higher. So right now we're seeing, I forget who asked, but why 17s and not like the 20s? The 20s are being traded right now, and you're seeing that, yes, a responsive bid has stepped in. We don't know how much they're willing to bid. But then if we trade 17s after trading the taper, and the taper showing us the information that, hey, look, there's still not enough bid, and then we hit the 17s and below, that's more information. So to me, I want the 17s because it gives the 20s and the 30s a chance to give us more info. And if that info remains not enough buyers, we can make that flush. I know it's long-winded. I hope it makes sense. But
It's coming down. Semi stocks are going back down.
he wants 678. Oh, he wants pretty much the absolute low. Are you partial? You don't partial, so you're taking nothing off until like the 670s, Kane. You're just gonna sit break even. No partials anywhere.
No, he looks for a target, right? So what is the target
Yeah, he
that
wants
he's looking for?
678.
678.
Oh no, he wants 678 contracts. Kane, I don't know if you know, I don't have it like that. I ain't got that kind of money. He wants 791.
What's the
Okay.
max you've done?
Size?
Yeah, how many contracts?
22. But that's a
Woo!
really uptrend with super shallow pullbacks because I could gauge the risk on that as I'm going up with price. But it that's a clencher.
And you were intraday scalping as well?
Yeah,
Or
so
maybe like a
when
swing?
when I was going like 18 to 22 in those environments, I'm not at that size for long. As I'm 22, maybe in the next 3 minutes, I'm already going back down to like 15, 14. And then if it holds somewhere, another pullback, then I'll start slamming some more on because there's so much open profit to work with. And I can have the risk still be minimal. And those environments are good because the pullbacks are super shallow to the point where if it's not shallow anymore, hey, something's probably changed. And by then, you've made so much money that it's inconsequential. But I haven't been able to catch that kind of environment in a while where it's like super grindy, slow all day long, very sloped EMA. Um,
On a trade like that, do you risk like are you looking at risk as a like percentage of the account?
no, it's still dollar amounts. So in those days, it'll be higher, like 2 to 3K. And I can make it higher because I'm booking it
But
along the way on the upside. Otherwise,
your
wait,
your the dollar amount that you were risking was just a smaller amount because the risk between your entry and your stop was so small that you could increase your size that much.
right. And it's because I'm already peeling off profits. So I'm sitting on realized profits already.
Oh,
That to
I
me, the
see.
bet is now I'm going to keep betting shallow pullback until it's no longer shallow pullback. And always by the time it's no longer shallow pullback, the money has already been made and it's, hey, we rode it till the end and we're happy. And that was through pain of always fading uptrending markets. You know, obviously in the beginning of my trading, right? You're always like, it can't go any higher, it can't go any higher, this and this. And it's just doing it over and over and just going crazy, just like why am I even doing this? Every day after or every time the markets close, I look at a blank chart, I'm like, it's just going up. Like, why do I keep fading this when I could have just bought every pullback? And then one day I decided I'm gonna do actually just that, and it worked.
What if I trade with the trend? How would that
Yeah,
work?
I know. What if I trade with the trend instead? And it's, yeah,
I've done 110 contracts, but the risk was a small percentage of the account.
dude, that's crazy. I think anything after 12, anything after 8 is a clincher. Anything after 12 is like, dude, this better work right fucking now.
All right, I'm looking for a long here in ES. We just hit the 43 zone. Um, I am looking for this is too high of a candle, so let's see if we can pull back a bit. And then I'll have my stop at the lows.
Oh, Kane wasn't here for his TV.
So
Yeah,
typically what I look for in an entry here is we pull back into support. I want to see a low, then bounce it to the 9 MA to create a lower high, maybe a little bit of rejection to confirm that we're not making new lows, and then reversal sets up. But you guys can see that this candle here in ES is above the 9 MA. So the lower high into the 9 MA is not really rejecting from the 9 MA. So I'm looking to see if we can pull back a little bit to back test it now. And then that can trigger the entry long for me. And then I'll just have my stop at the lows and see if this upward momentum that we have will continue, and see if SPY will push up to new all-time highs from this day. If not, I'll just do it again on Monday.
Yeah, Kane has done some insane size, guys. I definitely can attest to that. You guys should hear some of the stories. It's crazy. It's absolutely crazy. But he's got that kind of bankroll, you know?
Dude, I used to
Not
trade
this,
large
not this
size on
guy.
Schwab, and the commissions suck on there. The commissions be anywhere between 20 to 40,000 a month. It's this is before, like, it's something like Tradeaway came out and stuff like that.
My delta by price, guys, right now it's set for 16 ticks, 4 points, but I don't have an optimal setting. It's just what's the day's range and what scrunches it up enough and not too much. So if the day had bigger range, my chart would be even further crunched in and I'd have to expand the tick size. But we have a pretty small range. It's only like 200 points. So, my price scale would be like this, and 16 is fine. I always like to have the entire day's range right where I'm looking at it. I don't like to do stuff like this. I get lost in the sauce. I need to see the whole picture. So if we have a 500-point range today, it's going to be like this. And then I have to increase tick size. So there's no like science to why I'm doing this. It's just what's going to be able to show the information for me. So don't read too much into that. Not for my setting at least.
Again, Q is going to make a new low for Kane. Yeah,
Maybe it's a good
semiconductors
thing.
are coming down hard.
It's a good thing Kane wasn't here when it traded close to his TP because now he's getting there's that 50 points down to the next node of volume right here, 770s, 780s. So that first, what I was saying was like that first flush is done, and the next decision spot is here. This is where they built volume before they broke it higher. So we'll see if that
Second, my
bid
puppy's barking.
still willing. Show the puppy. So Kane, oh, you're out. Nice trade, man. Kane says he doesn't have a volume profile, but I don't know. Does he? Does he? Seems like we're looking at the same stuff. He's a closet order flow trader. Oh, the puppy. Puppy cam. Blow it up, blow it up. So cute, man. Can you guys blow up Chris's cam? All right, hit the likes. You guys gotta hit the likes.
Hi.
If you don't hit the likes, you hate puppies. Hit the likes. Chat asked what breed.
It's a mix between an Aussie Doodle and a Bernedoodle. All right, so Kane's getting paid out. I took a stop. Semiconductors, I mean, I look at stocks, as you guys know, they're pulling back hard.
What's the dog's name?
Ollie,
Oh man, he looks like an Ollie. It's so funny. My one of my good friends, he also has a Bernedoodle named Ollie. It's just the name. They look like Ollies.
wait, they named theirs Ollie too?
Ollie. Yeah.
That's funny. It's a good name.
See
Later,
you,
Kane.
Kane. Well
Good
done.
trade.
Well done.
ES is still at that 43 zone. Unless we break it, I have to think that we're just going to be a little bit sideways here.
DSB, you can't hit it an even number of times. It's got to be odd, man. Give it one more for 21. Streamside says I also have a friend with a Bernedoodle named
Yo,
Ollie.
everybody's Ollie.
Dude,
Named Ollie.
did everyone just Google like best Bernedoodle name?
Hmm.
I mean, it's a good name. They look like Ollies. I'm not gonna lie to you, for sure. They look like Ollies.
NQ's way below the 9 EMA, right?
Yeah, it's actually just sloping down now. ES also. All right, I guess the supply is for real, man. I mean,
Yeah.
sheesh. 2 days worth, and because it just fell down after, we don't know how much there really is. They never even inched above it. So it could be all the way through super heavy. TBD. This is a boogeyman for sure. So there will come a time where we trade back into this area and you're going to look for the boogeyman. You want price to just sweep outside and see, hey, what's going on out there? Is it for real? Is there really a boogeyman or not really? But right now, there's definitely a boogeyman out there. We have no idea who's willing to get in front of that price. They're not even willing to test it.
I'm still looking to buy pullbacks. And we're just in a massive uptrend from that November, what, 25th? No, 20,
Still at
21st
VWAP, ES
low.
VWAP. The shitty part is this candle that's going to close is so anti prior candle.
NQ's back to prior day high, 710s support. ES following.
Dead body. Yeah, it's the same as a dead body, but it's not as strong. So usually I'd want to see a bigger node and thinner volume downside for it.
Y'all want to
So
see a dead body?
yes, yes, dead body, but it's not like a really nice one, honestly. So I wouldn't really classify it as in play. No. Dad bod? Yeah, maybe dad bod. Fucking chat.
NQ is back to the breakout area. 710s prior day high. ES is it's pretty much almost there.
Yeah, this is where they reclaimed price and then trapped the shorts in the 730s, 715s. So, I mean, they've stepped up along the way, but they've been trading through. So you never know. Now we're kind of just waiting to see, all right, when does this sell like kind of shut the faucet off? Tape is really heavy. Is your 24-hour VWAP line just standard NT? Um, No, this is from OFL, but it's the same. It's just a 24-hour VWAP. So the standard NT one is probably going to be exactly the same. So you'll be fine. Yeah.
See if we can get
24 VWAP
some
bounce.
support here.
Okay, so there are 24-hour VWAP questions or people looking for bids. It's a much different trade. So I really like the first time, like the first test after the market's making choices in that direction. So this one is making a choice, right? Super huge move up. First time we can get the break. But this one comes with more information. It comes with more choices that have been made that are not really conducive to upsides. And it's, at the supply spot. They tried it, they tried it. So the market's seeing this decision now and it's seeing this one as well. So, like I said earlier, you lose the node at some point, it could retest it. And if they can't find trade in these 30s, it's just going to continue. And it's that 50-point runway down to the 70s. And we're still not finding that bid. We're in an old bid spot that drove it earlier and they're getting it now, but they need to get something for it, right? So that's why in these situations, like you would see Chris wait for some sort of continuation, some sort of hold. It could be a higher low and this and that. And that's really what you would have to do because you don't really know when the selling is going to shut off, right? This could just be a pullback reoffer. But this would be the spot they have to hold because this is
Yeah.
the spot where they finally pushed after going downside. This was uh, earlier in the day's higher hold when the sellers could not flush it back down and they paid that price. So it's a sensible spot for longs. And I don't say it because it's VWAP. I don't think it's because it's VWAP. I think it's because this is where order flow showed its hand earlier today. VWAP in a really strong environment, I would hate to have to come back to it. So this is not about VWAP. This is about the order flow that drove it up in the morning. Two
Yeah,
different
good
trades.
good area here.
Charts and code. Congrats, man. Thanks for hanging. There isn't an NT one? Well, there's no NT 24-hour VWAP. You guys sure?
They can create one.
Yeah, no, you just put VWAP and set the.
Oh yeah, you
That's
can
what I
set
would
the
think.
time, no?
Yeah, that's what I would guess. Would I expect the 760, 755 to act as new resistance? I would expect more so, yeah, 760s to 770s, more so than lower, because this is that volume node here. So I would expect it to be around here versus in the 50s. But look, if they can find a higher hold, it would be good for longs. But it's TBD, right? The tape is still really angry. I don't know if anyone's looking at the tape, but the sellers are not done selling. They're just having a hard time getting continuation because there's clearly a lot of bid interest in this spot. So whoever gets the continuation here, I think it will give you very actionable information because they're fighting it out. Okay, so chat saying yes, there is order flow package and NT. Yep. Yeah, so
Do
there's a lot of
we
MGI, right? There's the VWAP, there's prior day high, there's this and that. But, something I do outline in my playbook too is the MGI is simply a line until the order flow confirms to me that it's meaningful. So it's not, to me, in my lens, this is not occurring because it's VWAP or because it's prior day high. It's the order flow that confirmed this area to be important earlier, like 15 minutes after the open. That order flow confirmed, all right, this spot is for real. It's not that red line that says PDH on it or this and that. Those are just additional, inputs of context that can frame the bigger trade. If that makes sense. I hope that makes sense. No, Matt, I'm not buying or selling anything. I've sold and bought already. I've done both in the morning and I'm not doing so anymore. And a lot of information has changed since. So the market I was trading, the idea for the market that I was trading in the morning or earlier is no longer the current situation. Now it's all right, are they going to hold this, right? Earlier when I was taking the trades, they had already held it. So now they have to prove it again, and it's a different experience for sure. Gold gave a lot back, but what a move. 30-point move, almost.
It's trying to hold here, ES and NQ.
Yeah, they're figuring out their feelings right here.
Yeah, some negotiation taking place. Let's see if new lows come in or not. But this is like XY said, this is the good area for NQ. ES can see a little bit lower for that similar area. But it's pretty much back testing it as well.
Am I on a streak? Yeah, I don't know how long. But yeah, let's ask this way. What if you just, it's a good question. Okay. If I woke up and just turned it on and I'm looking at what I'm looking at now, would I be interested in longs? I would be interested in longs, but I wouldn't be in a long just yet. There are a lot of other inputs. The 15-minute bar prior is really, really dirty. 5-minute wise, you've got a decent bar, but the bar prior to this one that just opened is downside continuation bar. Um, so although order flow is showing, yeah, there's a passive bid, this could hold higher low and just go right back up. There are other inputs that tell me, you could see more downsides. So that would definitely keep me out for now. But it's a long I would be interested in, yeah. Would just see, it would have to be a better environment or a better setup. Also, what I would think is there's no rush to try to access these lower prices when they could run these shorts through, right? Run above the shorts and hold at this spot on a retest. So hold like the 750s and the 740s on a retest after being able to trade the 780s and higher. So that would provide a better springboard to get your risk on, get a better point of risk management for me because right now you could put your stop in the 30s, right? Which isn't too bad, or the 20s, but the tape is still two-sided here. I don't really have the answer yet, so you could just wait for the answer. Be patient, wait for the answer on which side they want to get continuation. And if it's long side, wait for the selling. I think this was like 2 days ago. I did the same thing and we caught along. I said, okay, we're breaking out. I'm not in it, but I'm not willing to get long until sellers actually hit the tape. And they never did. It's running, it's running, it's running. They finally hit the tape. And now it's like, all right, now they're showing their hand. I want to see how strong the hand is. Wasn't strong enough. We got long. But if I had gotten long prior, it would be, okay, well, there's no sellers. I'm getting long. There's no answer yet because the sellers aren't hitting the tape. So what if I got long and all of a sudden they decide, all right, now we're gonna hit the tape? Then I would have gotten stopped out, right? So I want to see that info. If we go downside, all right, we're gonna go down, but I want to see buying hit the tape. And then what do they get for it? If it's nothing, you get a reoffer short. Safer way to trade, better way to trade, more sustainable way to trade, and better for risk management.
731. Somebody's long at 731. Still a bit weak. See if we can get some action here.
PBH, this is a 1-minute chart. Sorry, I'm looking at chat now. I went on another little rant. Where's the money line? What do you mean? What are we sports betting on? How far does price have to go for you to know it has made a decision? It's not about how far price has gone, it's about where in the market structure it's poking at. So if you're looking at structure, to me, it's volume. And if so, this is pretty much the low volume area. If we can start to get trade in low volume spots, it means that the market might be ready to make an extension, which would be the 70s and the 80s up here. So it would have to be that. On the downside, clearly, we know now through the delta and all the order flow, there's a bid that goes all the way down to like the 710s. So until the market's trading below this bid, shorts are going to be dicey, right? The information then would be if the market trades below 710's price, it means now we have absolute confirmed information that there are more sellers than buyers in this range. But we need that info. It's not until they break this where we can say, okay, they filled buy side, which means there wasn't enough buy side to match sell side, which means the market needs to go further to find the buy side that can fill the sell side. It's just an auction. It doesn't have to be some guy that got trapped in a van and made it an algo and stuff like that. It's just we have evidence of a lot of buying activity here. If the market can't breach through it, you can't speculate that there's more sellers than buyers. You'd have to see it through the order flow, right? But if the market does break, it's not even speculation that the market's sell side anymore. It's proof. It's sold through all the buying. There's not enough interest to hold it, right? So hopefully that makes sense. XYZ Poly Market has an order book. Poly Market's got a DOM? Oh man. All right, that's gonna be my new thing. I'm gonna be a Poly Market order flow influencer. I'm trying to get more. Everyone in NT Live has like hella
Wow,
followers
gold.
on Twitter. I need to catch up, so. Oh, it's not a DOM.
Gold
Someone
just
could
took a
make it
hit
DOM.
too. Look at that
Yeah, so
drop in gold.
there's two pieces of confirmation, right? I mean, we already know that there's a passive offer that sits here, and there's offsides bid right now. There's offsides buyers, and that's not good. And they just bought through this buy spot. So then the question is, do they press price? So do the sellers reload price further down, or are they not interested in selling this? If they're not interested in selling this, the market then is going to see this and be like, all right, they made a choice. They had their chance, they made their choice. And the choice is we're not willing to sell this range. And if the market can see that, you're going to get the move back through and on the other side, which is, the 750s. So they have to really start reloading when they get back into the volume, which is this spot, right? You just mark out volume. You can see it's this area.
What was that? 715?
The low on that move was like 09, 709. Okay, so if they can't sustain an offer in the 720s, it's just going to trade 750s again. But if they do sustain the offer, it means maybe they're going to be willing to build volume downside here again. So those are just word vomits on the tape. Let me see this chat. Thoughts same on gold? Gold just failed pretty bad. They had their chance to run with it like NQ. And if you look at the volume now, right? How do I do this? If you look at the volume right here, this is kind of where it tapers off. Up here, a lack of. And what did they do? They came back into that range. And what is it? It's another lack of. So the market sees this choice too, right? We're back in this spot. What's going on? Nothing. And if the market sees this, it's going to be like, okay, well, no one's still willing to buy through this range. I'm going to offer it. And if anyone that's interested in buying is seeing this, and be like, well, if no one's willing to buy through this, I'm not going to get long. I want lower prices so that I could have a better runway to sell it through or something. But who's going to buy like this, seeing that no one is willing to buy through this? Not many people, right? So to me, that's the gold story right now.
We're we just back tested what we needed back test, and we're starting to hold. We have an hourly higher low in ES.
1 minute for this 5 minute candle. If it closes as a doji up, this could be a good reversal.
I'm looking at a possible long here again off this back test, but it's still sluggish. Let me share my ES hourly chart, or both ES and NQ. We're back testing this breakout here from prior day high and this consolidation. So this is the first higher low here. Higher high, higher low. If that needs to hold to attempt higher, same for NQ here. We're back testing this overnight range. But failure to hold would just mean that NQ can see all the way back down to 640s. If this fails in ES, we can see 668 again. And the weakness continues. So if we can't hold here, then we see a IB low for both. And then ES maybe real fall to the lower will be 668, NQ 640s. Yeah, look at that.
Oh, my bad. No, I'm here. I had to reply to something real quick.
That's funny.
Order filled.
It's either you were frozen or you fell asleep.
Order filled.
If you're still short, I mean, I don't know if Kane's still short, or maybe he got out at that price he was looking for.
No, he got out. He got out while we were on stream. He got out, I think it's 770, 780s, I think. Yeah, my bad, chat. I had to reply to something. And I got some, hey, 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 hey. It ain't a big green day without some strawberry matcha though, hey. What the hell's this? Check this out. Oh yeah.
If you're short from the highs, you're just getting paid, so congrats. We're
Gold
just
gold got
getting
taken out to the
around.
back, to the shed. Oh yeah. Yeah, so this is definitely it's a great example about market making decisions once it goes out. So this is going to be kind of like a boogeyman scenario too, right? For NQ. So the market comes up and everyone's looking like, all right, what's going on? What are we doing up here? Everyone that's long, that's looking to get long, that's looking to buy a breakout. Now the market makes a choice and goes, nothing. We're not going to do anything. So everyone sees it and it's like, all right, well, if the choice up here is this, we need to go revisit. We need to make the next choice. It would be this area then. It's this volume, right? The next choice would be here. Made another choice. These guys are probably like, I'm not buying this if no one's willing to buy this. No way. They're like, all right, gotta go further. So we're here. So that's
Yeah.
kind of like the way I frame it. It could be wrong, it could be right, but that's gonna apply here too for NQ. So this is where we're selling off from today. And this is the boogeyman, super thin volume. We have no idea what's out here. What we do know is there's a lot of supply. 2 whole days they tried this, and they couldn't even get outside of it much. There's a boogeyman. We have no idea if there is one or not, how scary it is, if it's a nothing burger. There's incomplete info out here. And still today, they cannot trade through that supply. There's just so much of it. And no one's willing to roll the dice and see, like, I want to see what's out there. I'm willing to buy this because I'm not afraid of what's out there. Market sees this choice and goes, hey, I remember what happened last time. Now they're not willing to long this. Now they're not willing to long this. No one's willing to long. These guys tried. They got traded through. Now the market sees this. This is two sets of trapped buyers right here. This indicator. It's huge positive delta. The first one up here, second one down here after the break. They're reloading. So the sellers who were getting smashed all day, now they're reloading. They're willing to step down on price and sell here. They're willing to sell here. They're willing to sell here. And until they show a lack of willingness to continue selling, which you can see through a lack of volume, fading this is going to be very dicey. And then we had this candle close. Continuation candle after that, unsurprising. So, like earlier, someone asked, would I be interested in long? Absolutely. This one, sure. But I wouldn't have been long yet because the other inputs are saying, I don't think this is done on the downside. There needs to be more alignment for me. And so how do I get over that? Well, I allow the markets to do it if it can trade outside into where it's been rejecting trade on the upside and then come back and make a hold somewhere with initiative selling. So I don't even remember what the original question is anymore. Just ranting at this point. Zelino, have a good weekend, man. Thanks for being here. Actually, thanks for being here like every day. We appreciate it.
Yeah, he's a good guy. Later, Zelino. Have a good weekend.
Hans, what's the Michelin rated matcha shop? Dude, my wife, like all the other wives, they love matcha, so I've probably been there.
Thanks, skilled trader. I feel like it was more of a conversation than actual structure education, but it was good.
Kane just made that Lambo. Dude, yeah, Kane trades with like scary size. Like I could never, honestly. I don't understand the importance of 25,710 on NQ. 25,710 on NQ. Oh, this. Well, because 25,710s would mean that the buyers who are clearly present in the 20s to 30s got traded through. So it's not a level. The 710s weren't a level. It became an area of reference because of the order flow above it. So if there's a lot of buying above that price and the sellers are able to trade into and through that buying, then it tells me the information that, dude, this selling is outweighing buy side. I can't get long if that's the case. Right now, the story is switching, right? They've built volume here, which means it's two-sided tape, which means there are sellers, but they're back above. These guys are trapped right now, or they're at risk of being trapped, and they're holding back into this old range. So if they don't offer here on the sell side, it can get very, very dicey for them because of this now. 720s into the 690s, this range, they're selling. And if they don't get rewarded because they're trying to like short the hole in a way, they could squeeze, right? But at the same time, if you want to bet long side, you need to see that they're getting continuation. How active then is the buying? Passive buying is one thing, but you need to see them cross tape. That's when they're willing to buy, when they're hitting the market, buying through the offer, things like that, which means you're going to get a new swing high. So until they make another swing high, you're probably going to end up on the wrong side, like right here. Yep, no swing high. They got into um, prior absorption and they let it fall again. This is how you stay out of trouble is make each side prove itself before you hop on. Easier said than done. Don't get me wrong. I understand that.
I get enough. Just be a
Blue
bit
Shark, why is your
choppier.
heart rate near max? Oh, it took a gold short. 30-point gold short. Congrats, man. Yeah, Caleb, if you stick around long enough, you'll learn a lot of things. We have so many different styles of traders that you'll definitely find stuff that works for you. I would wager that most won't work, but that's normal. Everyone's got what works for them. Okay, this is a higher hold. I do think
Yeah, I got long. I'm gonna stick with it and see if we do bounce.
this is a really clean one on a volume perspective too. They came back into where they were going to be trapped and no interest. There's really thin volume, and if a build wasn't enough to push, a lack of a build is definitely not going to push. Another decision made here. Tried it, came back, said, "Yeah, we don't want to do this anymore. We're not willing." And then they get trapped, and Chris gets paid. Super clean.
I went with the ES over NQ. I typically like to trade NQ, but I just see ES or SPY as a better candidate because it's SPY is so close to all-time highs, and then NQ saw tech saw a pretty strong sell-off from semis. So we'll see if this can work and push out. I do like that after similar to XY after this initial rejection. So I put it on earlier and then I closed it, I think, for -1 point. I do like that after this rejection here, instead of continuing and seeing lower, we immediately moved back up. So I saw the same thing, but in a different maybe format as XY. And then to me, that's like, okay, that's also a higher low here and can be a change of character. So because we're also, again, back testing that breakout that I brought up. Let me share here. Like, it makes sense. It may not work, but I have to, we're back testing that prior day high and the breakout here. So can this be a higher high, higher low? And then we see continuation higher. NQ as well, a little bit deeper. And again, that's because the NQ has been weaker due to tech. So I like this ES long on this back to prior day high and this earlier breakout.
This is a long I would die with. To me, it's a good long, even if it doesn't work. This is a long I would take 10 times out of 10. 9 times out of 10. Today being that one. But if I hadn't traded yet, I would try these longs. And I would not feel bad if they didn't work. This is what a reversal looks like.
Yeah, I'm watching this higher low here in case if it doesn't start to hold, and maybe I close out of the trade and I just wait.
Mhm.
But like everything's
Kane,
there to see higher.
Kane, you gotta ask chat. I don't know what chat did to gold, but they're the ones trading gold. We're not trading gold today. Doesn't affect that prior day highs right here. Yeah, of course it does. But sometimes you just gotta pull the trigger.
And it doesn't look like it's gonna be ready.
Yeah, if it were going to reverse, this is what it would have looked like. Sometimes it works, sometimes it doesn't. So yeah, it can't be results. You can't be like outcome oriented on a trade by trade basis. It was the buyer's chance. They had a really good chance to make that happen right there. And well, I mean, if they hold this, they still do. If they don't, you move on to the
Yeah, it might
next.
just be either down or choppy. So I might close my trade here for minus 0.5 R and just wait.
It's the EMAs, man. Yeah, text, that's exactly what it is. The buyers really did put in a good effort. And if you want to get long, that's what you want to get long with. Just,
Yeah.
you know.
So everything was there. You can see how from what XY looks at and then from what I look at, everything was there to tell us, hey, the bounce potential is there. Can it happen? So I used my entry rules to get long, but it's still pretty weak. And it might still hold and then push out, but I just closed it at minus 0.5 R. So if we can't hold here, then we'll see 68, 68 in ES, and then NQ can come back down to 640s. It is the best stream on YouTube. Tex, you're completely right. Ninja is the best. Some great traders, some great guests that they invite. I mean, you have everything. You have huge, huge, huge macro conversations, and then you have micro in time frame, right? Like people are talking about multi-month sort of movement, and then the traders are looking at anywhere between the 1 minute to the hourly.
Multi-month all the way down to multi-second.
Yeah, so you have best of both
This
worlds.
happened 2 seconds ago, so I'm gonna do this. Yeah, it's top to bottom. It's all there. And there's so many different trading styles. It's good to see so that everyone can kind of grab whatever speaks to them and make the most out of it.
I know, wait, that's right. We'll get there. I think, Ninja already has 161,000 subscribers. But also, look, a lot of those other ones they're like yelling at you and they're
It's a
going
lot of chest
overboard.
thumping. Yeah.
Yeah, it's
I think it's an entertaining thing, right? I get it. You got to be an entertainer. You got to be riled up and say crazy stuff. They don't make us do that stuff here, which is cool. I would be a terrible entertainer. Best I can do is rant.
then it's also like my question for that is are you what if there's so many people watching that type of content, are you really there to learn and get better, or are you just there for the entertainment? And like how committed are you? That's my question, right? So maybe you guys have answers for that. But like if I'm serious about it, I'm not watching that. I need to get better at what I'm doing.
Yeah, there's a huge risk focus on this channel, and they've made that clear to us too, that the main point of emphasis is always responsible risk, not outsized, P&L trades. It's really not about banger trades. They just tend to happen sometimes when the market feels generous, but this is a risk-focused broadcast. Larry, yeah, thanks for always showing up, Larry. For all the regulars, we appreciate you guys. We do. We're well acquainted with your names. I wish Reginald was here too. spam some emotes. I already know Dio's here for sure. I don't think he slept for months, but Dio's here. Like there's a lot of names we're used to now. We appreciate you guys.
Oh, yeah, where's Dr. Steve?
Oh yeah, Dr. Steve. Maybe he's here. Maybe you just gotta conjure him up, you know? There's Dio. Yeah, we're so acquainted that you get used to you find out how to conjure certain people. Like what gets them out into the chat, you know? You know they're lurking. There's Reginald right there.
Hey, Andy, I see your comments. Good job, man. Good job on that short.
DSB is Dr. Steve. Oh.
Yeah, I saw that. They changed, I think YouTube reverted the names to like the actual name you had on your handle versus what you chose to be
What
displayed.
is my handle? Oh, so my handle is like the actual YouTube account, right?
Just
Not
type
like what you
ASDF.
I had to go. It's a test. Testing. Just want to see what my handle was. You lost man dude, but you're still man dude Traderson. Like, does it get better? Might be an upgrade. Yeah, Mr. Josh Platinum, always on with us too. And then there's user W5678 $ XQGB. So back into this low volume spot coincides with that old balance. So they've got to make a really, really important choice here. Do they let price start to accept back into this old balance again, or do they hold this? And if they hold this, it's also this is super important right now. This is the whole day. This could be next week. This is the difference between a failed breakout and then you get trapped in this range again, or the market confirming, hey, this breakout's for real. We don't want to trade back into this. We only want to trade higher. This is where they're going to make that choice.
Yeah, daily NQ candle doesn't look that good. So we might have seen a high from this reversal from November 21st. And either from here we consolidate to then push out to new highs into the end of the year, or we get a pullback first and then build more sort of daily structure. But this action is reminding me, I don't know how many of you guys were trading, but December 2023, we had a similar bounce off the lows. And then for like 2 weeks, it was just choppy grind back and forth until we built out like a sideways daily structure. And then the last 2 weeks of December, we just rallied. So I'm kind of wondering if this is what we're building out as we pushed up a little bit, but still a lot of back and forth action. Like we're coming down now into the RTH gap. At this point, there's nothing here. There's no valid zones until we get to 68, 65, 68, and yes, and then 640 and NQ, we have something there. We're also at the IB low. What's selling off?
Bought one NQ at open. Okay, so Richard Hills is making a ton of money today. Congratulations. So you're saying we can trade XYZ strategy, but risk is more important? Yeah, the takeaway. I'll make a lot of jokes, honestly. I'll harp on like the ICT stuff and I'll just make a lot of jokes about trading. I'll joke about trend lines. But I honestly do think everything works. It really does. Everything boils down to one thing. If I give you a coin and I just say, hey, one side's long, one side's short, just follow the coin, but manage risk in a way where you have edge, where when you're on the wrong side of the market, you're only allowing it to take, X amount from you versus the upside, then you're gonna do well. It could be so simple, right? We get in our own way with things like that. So yeah, if it's not Elliott waves or moon cycles, I firmly believe you can make plenty of money with it. And there it is, besides moon cycles. And do not ask me about moon cycles and Elliott waves. But everything else, I'll make jokes about it. Like, check this out. I don't know. I could sit here and draw a trend line, right? Uh, how do I do this? Yeah,
Wow,
I can sit here
spring
and do things
B.
like this and make jokes like, oh, trend line this. Anything works because all you need are the parameters to get you in via a setup. And when you're in, that's when the real edge takes place, which is the risk versus reward. You master the risk management part, everything opens up. I promise you. That is, I'm not black and white about a lot of things in trading because I think there's something for everyone, and most things are not for everyone. But I'm very black and white about risk. If you master risk, everything opens up. Your data will show it. The proof of concept will be there through your P&L, your equity curve. There's only one thing we can control is how much we allow the market to take from us when we're on the wrong side. If you think you're going to control where the market goes, you are being foolish. One day you might learn, and if you haven't learned, you're not a trader anymore. You're in the dirt. You're in the graveyard of traders. Only thing you can control is how much you allow the market to take. Where the market decides to go after you enter, that's not up to you. It's up to the market.
Spring B says, I've not missed a day since he started a couple weeks ago. That's really cool.
He said he's not missed a day since we started a couple weeks ago,
Since
or
he
he.
started a few weeks
Uh,
ago.
yeah, I mean, we're happy that we're providing value. The chat is encouraging, and it helps tell us that we are going in the right direction to give value to you guys. So
I love Dan Tharp. I read all his books. It's what really changed things for me. No, not in a trade. Who asked that? Dal. I attempted a long here, but then I closed it when this higher low failed to hold. All of Van Tharp's books, James. You just got to read all of them. Super Trader. Let's see, I have them back here. Trading Beyond the Matrix.
wait, Josh. Okay, so Josh, it didn't work out, I'm assuming. Sounds like something you could work out if you really drill down and journal and get data and stuff. Am I a Van Tharp fan? Honestly, I have not finished a trading book. I'm really bad about that stuff. It really is a do as I say, not as I do thing. That's just me being lazy. The books are really good. I just never end up finishing any, but I don't spend too much time reading books. So, yeah. Uh, Someone says XY, but if I keep my stops tight, keep getting hit, lose more than. Well, then, yeah, then that's not working for you. Just because that works for somebody doesn't mean it'll work for you. There are plenty of people on this channel that don't use tight stops and make a ton of money because it's what works for them. If I use stops like theirs, if I have a stop like, say, Kane's or Tanya's or Chris's, I'm gonna cook myself. Absolutely. I won't know how to properly manage it. I will start to feel emotions that I'm trying to keep outside of my trading, right? And it will just start to unravel. To me, I have to be a right or right out trader. It's just what works for me. It might not work for you, you know. So that's kind of why it's good to have so many different styles on this network so that you can see and try things and all right, that doesn't work for me, but this does. And then, kind of make your own thing. So if anyone's like seen my playbook, I'm very hybrid in my trading. It's not pure order flow. There's price action in there. I've got squiggly lines. A lot of order flow traders, they'll shit on squiggly lines. Like, why would you use that? It's lagging indicators, la la la. If it speaks to me, it speaks to me. I don't care what it says to somebody else, right? I don't care what their inputs, can say to me. If it doesn't speak to me, it doesn't speak to me. So I've got squiggly lines. I've got price action. I've got order flow, um, you kind of just aggregate all the things that speak to you, and then that's your strategy. But it takes time and it takes effort. Time to try and really see if it works. The effort is to actually try it.
We do have some divergences here. NQ is starting to lead a bit now.
Al Brooks is a fraud? I mean, there's also a lot of frauds in the game, so hey. That is actually really crazy to hear, though. So,
Yeah, there we go. We're starting to push back up. We did have a divergence here between ES and NQ. We didn't really get to that 68 zone that I was looking for in ES or NQ at 640s. But we do have we're attempting that bounce now. A little bit deeper than that back test of the breakout.
so someone asked, what's more important, increasing TP so you have better risk to reward, or reducing risk to have better risk to reward? I don't think it has to be one or the other. I think it could be both in some sort of balance, in some sort of scale. How I operate is always, okay, where is the market giving me structure where I can invalidate this? And how much of risk would I need to be able to do so? And how much of a runway is it giving me? So I'm not seeing it as where do I need to TP to make it worthwhile. It's just looking at the structure and going, all right, well, I can invalidate here if I get in here. And if it works, it can go all the way here. So I don't do like set R, I've got to do 1R, 2R, this and that. It's just like structurally, is there enough runway on this trade for me to get an easy TP? We'll say easy for lack of a better word. Easy TP versus what I have to risk. So how much is the ticket going to cost me, which is the risk, which is the stop? How much is the ticket going to cost for me to get an opportunity to ride the runway? So that's how I view it. Would I ever do a sit down talk? I don't know, honestly. It's not something I'm looking to do. But I don't know,
A
things
sit
change. I
down
mean,
talk like interview?
like yeah, like interview, like chat with traders or Riz. I don't know what Riz. Oh, like Rizdom, I guess you're asking. It's not something I'm looking to do. I don't know, but things change, right? Like I never thought I'd be a streamer. I never thought I'd have a face cam on stream. I never thought I'd be up doing the morning streams, that's for sure. Life comes at you fast. It's hard to give black and white answers, but at the moment, not necessarily. No. I
I'll connect you with chat with traders.
Yeah, Chris offered me a hookup if and whenever I'm ready to do so. So, which I do appreciate, but I mean, only recently got some sort of Twitter following. I was always a ghost. Preferred it that way for a long time. I still do to some degree, right? You do want your privacy and stuff like that. There's a lot of haters out there. You never know what you get. I'm not interested in Twitter beefs. I'm not interested in calling people out, whatever. It's just like, look, things are what they are. People will find themselves, they'll gravitate towards good traders and they'll spit out the rest. It's like auction market theory. So I
Is there
like I
a
like ground
Viore
life.
robe? I don't know. Probably
I don't
it's
know if they
probably
have robes actually. I should look into that. Chat, all right, I got a question. Um, for my next Versace robe, are we going red or are we going white? NT orange.
yeah, paint it.
It seems pretty split.
Yeah, we're starting. Tracy says pink.
Pink. I think there is a pink.
Order filled.
Anthony, it looks like it. Looks like we're starting to hold here.
It's looking like white. Hmm.
Order rejected.
Multiple higher lows here. We have a divergence between ES and NQ.
Order filled.
But
Green
it's
with
just a
dollar
bit
signs.
choppy to have to consider that.
Green with dollar signs. Tracy, you should get the pink and one day we'll match. Cameron? Yeah. Cameron could pull off pink though. Killer Cam. A guy with the name Killer Cam could certainly pull off pink, because who's gonna tell him otherwise?
I think above these 5-minute highs, we can see a bounce. 68, 79, 707, 708. Oh, you were talking about that 709 number, right?
Hmm.
Yeah, it's back testing it out from underneath.
It looks like it's looking to really try to round out the lows. ES is
Still
still kind of heavy on.
sluggish.
Yeah, ES is sluggish at these lows.
So far, it is holding though.
But they're holding that prior range so far, yeah. So there is hope that we won't get thrown back into that range and stuck in it again. The thing too, I'm just noticing is there's no, so they tried to put a single print in, they covered it. Usually on strong trend days, you'll get single prints, and there just are none. There were none, which is a little spooky, but I would certainly rather look for longs than shorts unless we're trading like 620s, below 620s. But otherwise, longs are a much better play on risk and reward.
Yeah, seeing that bounce now.
I use 1 minute chat. Painting the grape. Dr. Steve, let me go buy the Painting the Grape domain and you'll be able to find it. I can't tell if I'm talking to Dr. Steve or Cam. Do I have a green one? I didn't even know there was a green one. I just know there's the white, the red, the pink. I think there's a yellow. Yellow? Oh, maybe I can ask him to make me an NT orange.
Hey, Jen.
Hey guys.
Hey,
How's it
Jim.
going?
Thanks for that, Mission Control. Doing good, man. Great job, you guys.
I actually like that they do that now. Production can give us a little cue in the back,
So I can't sneak up on you.
so you can't sneak up on us and startle us, If Jim's sneaking up on you guys, it ain't gonna end well. I'll tell you that much.
I'm glad they made the announcement. Anyway, great job today, guys. Finishing strong on a Friday. I love it.
Getting ready for the weekend?
Appreciate it.
I am. This is the first weekend that I've been home for as long as I could remember. So
Hey,
I'm
since
gonna.
you're a big F1 fan now, did you hear about Haas
No,
becoming Toyota?
really.
Yeah.
Well, we got Cadillac too, right?
Cadillac's coming in next year. I
Right.
think Audi as well. So
Yeah,
it's
we're
it's
gonna get
gonna
a lot
get
of
a
new
little
engines. It's awesome.
interesting.
Yeah, for sure.
Also, since now apparently you're a UFC fan, anyone that's got Paramount Plus, you will be able to stream all the UFC fights next year, I think.
Oh, w- we have we've got everything. You should see my. I mean, you name it. We subscribe to it.
You've collected them all.
Collected all of them. It's unbelievable. Anyway,
Life
guys.
as Jim sounds sweet.
Ugh. Any event, you guys are awesome as usual. Great week. It's a little weird kind of volume today, but we're gonna finish strong on Friday. Next week's gonna be, busy week as well. So we're gonna be here at Ninja Trader Live. Appreciate everybody participating, including folks that are listening from wherever you're listening from, and folks that are participating in the chat. Thank you for that. We love providing this great nonstop stream with all this great content, all these great folks. So hit that subscribe button. It's important to us. We appreciate it. If you are subscribing to the channel, it's free, it's easy. Just click the button. It'll be awesome. Appreciate you guys for doing that. For the folks that you have done that. So great job today, guys. So appreciate you, man, and have a great weekend. You got plans, real quick?
I think I do, but I gotta check in with the wife. She knows. She always knows, and I never know.
Yeah, I got you.
I'm
How about you,
doing
Christian?
a Friendsgiving, or what's in between Friendsgiving and Christmas? Maybe like a Christmas get together?
That's
Yeah.
right. Tomorrow I do have a Friendsgiving. So Chris reminded me.
Holiday season. You don't need an excuse. It's the holidays.
Right.
Yeah.
You guys were working hard all week. You did a great job. We appreciate you
Oh
guys.
yeah.
NT Live definitely appreciates you guys. I know everybody in the chat does too. So, and everybody listening. So thank you guys.
All right, Jim. You have a good weekend. Take care,
All right.
everybody in the chat.
See you
All right.
guys.
You too, guys. Take care.
Later, X.
All right. Stowe's coming back. Hang tight there. Whoever asked that question. Don't worry. Stowe's good. He'll be back. Looking forward to his return. Let's take a peek really quick. Have I shared my screen? I'm going to just take a look at this crude oil market. Just wanted to talk about that really quickly before we wrap it up for the week. This is a daily candle chart. Now, crude oil's kind of been stuck in the mud for a long period of time. Sideways action. Tracy and Anthony are talking a lot about it, how next year really energy markets are going to be the story. I kind of agree with that, but I'm ready to start getting prepped for that right now. So here, one of the, I have this like anchored VWAP from these lows back here on the 20th of October. This is the WTI crude oil contract, the January contract. January 26th contract, and just that's that white line going all the way across. And just looking at where we are on this anchored VWAP, we're finally kind of trading above it, right? We've been trading below it ever since the 19th of November, and that tells me that sellers are generally in charge, right? When you look at these anchored VWAPs from these special places, either price action is going to be above them or below them. Either sellers are in charge or buyers are in charge. Now we've kind of turned the corner a little bit today, so I'm kind of have my eyes open right now. I did a really quick fib measurement from the peak high here we saw on the 24th of October to the lows, and we're right at that 50% retracement. The other thing that's interesting is that 8 EMA is starting to cross. It's converging with the 21. So I'm looking for a crossover to the upside, and I'm also looking for some penetration above that 50 EMA. That's that blue line right here. This could be a case where we are actually going to make a paradigm leap up to the next level a little bit. Now, we do have a seller's wick today, and let me show you what that looked like intraday because that was kind of a little bit surprising. really nice burst, right? Initial balance low, 59.61, high, that's that white parallel line, 60.38. So a nice kind of flush up, but then it's really a textbook retracement back down. And guess where we went back down to? We went back down to the session VWAP, not the anchored VWAP, but the session VWAP, and that's what we're sitting on right now. So buyers might still be in charge here. We'll see what happens on the rest of the day. Settlement's early, and it's a Friday for this market. Remember that. So we probably won't move too much, but you never know. We are below call resistance, though. That red line there, that call resistance from Mentor Q, those lines are really important. Those one-day mins, one-day maxes, and the call resistance lines, as well as that HVL. So we're south of that. Jax 1 saw a lot of activity around 59.50 a pre-market, but if we get back down there, I would be surprised, but it's possible. And then that high vol level, remember, this is kind of where gamma changes here, and that's way down here at 59.25. So right now we'll see if VWAP holds. I also have that 9 EMA that everybody likes to talk about, also kind of sitting right at price right now on crude oil. And real quickly, we're just going to go over to the Bitcoin to see what we're doing on the Bitcoin. Bitcoin is taking it on the chin. I'm just going to go to a daily chart. And yeah, I mean, not a good day for the Bitcoin. Back down to almost that 23.6% retracement, below that 8 EMA, below the 21, way below the 50. These lines are not even going sideways anymore. They're arcing down. And there's my target, April lows. I have it already hit. I already have it outlined right there with a, I don't know, an ellipse of some sort. So we'll see if we can get that double bottom here for those April lows or not. But today it looks like the market's starting to think the same thing. Now we have this target wick low here and this other target wick low here that we want to pick off as well. But the Bitcoin's still looking like it's a little bit controlled by the sellers. So that is our final edge report for the week. It is Friday. We're not streaming this afternoon. But I do appreciate everybody being here with us. We had a great week. We had great guests. We had great trading. We had a great, this is the best trading community there is, no question about it. And, you know, again, I appreciate the subscriptions. Everybody, if you haven't already, we would greatly appreciate that. Click on that subscribe button. Pretty awesome. But in any event, thank you, everybody. Thank you for all the kind words in the chat for not only me, but for everybody involved here. So having said all that, most important message of the day, especially going into a weekend, please be safe out there. Be good to each other. We'll see you soon.
vivencia de los cachorros.
Order filled. Order rejected. Order filled.